May I request everyone to take their seats, please? Desks, please come and occupy your seats. Please. No standing, please. Please come and sit. Hello, Babu. Good morning. The sound is not good. Good morning. Good morning. Wonderful. Good morning to all of you. Telangana and Andhra Pradesh Association welcoming you all this speaker session and analysis of finance bill. This is C.A. Chandrasekhar Vemula in the capacity as secretary. Friends, for the last 6 months, we have hosted almost 6 speaker meet. This is the 7th one. Averagely, we are hosting 1 speaker meet every month, and fortunately, and we are really lucky that there is a good cooperation from all the members. The moment we release the program, there is a overwhelming response in terms of registration. And just to inform you happily that for this program also, somewhere we have to close the registration link. So that is the response of all the members. I think all of you can applaud the members of TAPTBA. As GC, we are committed to serve you, all the members. Please give your inputs and suggestions. We will try to improve on. There are a lot of projects are lined up. You must be observing. You can visit sometime after speaker meet. There is a mute tribunal. Mute tribunal competitions are going to be held on 15th February in that Birla Planetarium venue. It is a signature project of TAPTBA. Please do visit the stall and take all the information. And we're going to print a members directory. I think this happened 20 years back. Again, we're coming up wherein all the information of members will be printed. And there's a good response. So we're ready to do it under the chairmanship of Madhusudan Pujja. So all good. And this is possible because of the support of all the members. Once again, the GC is conveying all the thanks to all the members who are really supporting us to deliver our duties. And apart from members, friends, let me tell, we have the sponsors also who are regularly supporting us. Today, we have a sponsor in the form of Asset Integrated Info Systems. Can I ask Subramanian Garu? So please give a round of applause. This program is powered by Asset Integrated Info Systems, who is Tally major distributor, and they are major partner for Tally. So they are going to present themselves after some time after speaker meet is over. So thank you. So round of applause once again to Asset Integrated Info. Now, may I request sweet but short but sweet, very powerful, and round of applause. We have with us very seasoned chartered accountant, seasoned speaker, past president of Hyderabad branch of ICI, and past president of TAPTBA Association, and he is expert in international taxation. The moment Section 90 comes, Prasad sir name will be remembered by many people. So he is expert in international taxation, and he is going to address today our speaker and our chief guest for the inaugural CA P.V.S.S. Prasad, partner of Prasad and Prasad and Company. Request sir, please escort. Friends, we will start the program with inauguration of by lighting the lamp. Request the speaker sir and president and our advisor Ramdev sir, all GC members, Amrut sir, all GC members, please join for the lighting the lamp, and also request all the past presidents, please join for this ceremony. GC members.
शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शत्रुबुद्धि विनाशाय दीपज्योतिर्नमोऽस्तु ते दीपज्योतिर्नमोऽस्तु ते दीपज्योतिर्परब्रह्म दीपज्योतिर्जनार्दनः दीपज्योतिर्परब्रह्म दीपज्योतिर्जनार्दनः दीपो हरतु मे पापं सन्ध्यादीपनमोऽस्तु ते शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः
ईमान डोल जाएंगे।
शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः परब्रह्म दीपज्योतिर्जनार्दनः दीपो.
To hear from the president, O to president for his welcome address.
Good morning, all of you. Thank you. Learned speaker of the day and also our past president, the past presidents of the tax bar, senior members of the association, all the GC members, special invitees to the association. I welcome all of you to this August gathering on the deliberation of budget 2025. I think this budget has been different compared to the previous ones. If you would have followed the budget speech, I think Madam Finance Minister, the Union Finance Minister, has spoken one line from a Telugu poet, which was recited by a Telugu poet. I'll just repeat. Deshamto matti kaadoi, deshamto manashuloi. So I good attempt, maybe I tried. So the moral of the story is, it is the people who are important in a democracy, in a nation. And I think this has been addressed in a great manner in this budget as well. They have called it as a budget for the middle class. So that was addressed, which was long pending due. Maybe in whichever form, plus or minus conditions might be there, sir is there to guide us. But in a nutshell, it's a good attempt by the government to address the concerns of the middle class. As usual, the theme was the Garib, youth, Annadata and agriculture. Then if you see the, one more important aspect was, she has told that they are initiating transformative reforms. in some 6 areas in the budget. And the first limb of that was taxation, if you follow the budget speech. So I think they are initiating the reforms now. So the first step was already taken by announcing the new direct tax code coming in few days. That was the major step. Then she was also spoken about the faceless regime, Vivad se Vishwas. More than 30,000 applications have come in this scheme. So which was, according to the government, it was an overwhelming response. Some benefits for the MSMEs were given. They have doubled the turnover limits and the investment limits. Support in the form of credit cards, etc. So some benefits were given to MSMEs as well. One more important thing which I would like to bring to your notice, maybe you would have seen it already, Bharat Trade Net, BTN. So they are going for simplification of the export procedures. The documentation, the processes to be followed for the purpose of exports will be maybe possibly in a seamless manner it will be done. And government has focused on self-compliance more. Even in the if you see 100% in FDI was given in the insurance sector, mergers, fast tracking approvals and simplifications of the processes of mergers has also been addressed in this budget. So it's also a welcome step. Regarding the taxation reforms, I think in customs they have removed around 7 rates. So in a nutshell now around 8 rates are being kept in the tariff. The time limit for provisional assessment has been increased. Then voluntary disclosures after clearance of the goods, you can pay the duty and interest and come out instead of paying any further penalties. So if you have anything to be disclosed, material facts, that also can be brought in. TDS, TCS, I think we'll get to know. Updated return, charitable trust related, also some time limit changes were there. Personal taxation. I think extraordinary benefits are being given in this. Around 12 lakhs limit has been there, but we'll see. So this, in this way, I think this is a welcome budget. Apart from that, now we'll come back to the initiatives of the tax bar. So I think many of you would have attended the previous program in the month of December by Principal Chief Commissioner of Income Tax, Hyderabad 2, Sri Vijay Bhaskar Reddy sir and his team. And it was a tremendous response we have received in that program and the kind of feedback from the department also. So I think that is the power of tax bar and power of all of you, because ultimately your participation is our motivation. So we request you to regularly participate in such programs, because as you participate, we can elevate it to the next level. So that is the intention of the entire GC, and I would like to express my deepest gratitude to the entire GC actually, because I am the youngest of all. And I think by looking at me, I am not even 35, but actually I am. That is a secret, sir. So my age you decide. So whichever thing you put on me, I think that will fit me. Yeah. I am at least eligible. So that program was well received. Upcoming program, the Moot Tribunal competition, one of the biggest programs of the tax bar, expected on, not expected, it is being held on 15th of February. We request your wholehearted support. Please register. Please bring your teams. I think the importance of team, everybody should understand. The young members of your offices can participate in the process. They can learn the process of how to participate in a tribunal proceedings, from paperwork to the art of presentation. That is all being covered. It is not about winning the competition. It is about the participation of the program, which is important. So I request all the senior members at least to encourage their team members to get into teams. Whatever support they need, even guidance required, will be given by our conveners. I think they will also address it separately. I will not go much deep into that. Members directory. After 20 years, this directory is being published So again, we are taking lot of efforts in compiling the data. Please check your information. If you are not a member, please become member. If you become member before publication, at least that will get part of the member directory. So that is the intention. I think all support is being given in the hall itself. Please register and become a member as well. Membership, again, 7,500 is our life membership. So I request all of you to please encourage us by participating, by becoming members, and any feedback, we are always there. Entire GC is there. So with this, I'll put my words to rest. Again, thank you all of you.
But whatever you said, Deshamtone Manusulu, Deshamtone Matti. Right? You are also correct. I think can we give a round of applause to the President for the wonderful motivational speech. May I request our GC member, Samamuthi sir, please hand over a plant as a token of gratitude from taxpayer to the speaker. Raghu? Some ceremony is going on. Please do appreciate. Convener, co-convener, and of course competition committee chairman also to join here and share for 2 to 3 minutes about mid-tribunal. Pankaj ji, please.
This is a brainchild of Amritsar. It's been in the fourth round. Fourth moot tribunal competition is going to happen on February 15th. So we all, as chartered accountants, had this always, when we were doing articles, we used to always see that we are not getting enough opportunities. So I think there is a platform now created by the tax bar for you to take this opportunity to participate and get acquainted with the tribunal, because anyone doing a tax practice, it is important that he represents at the tribunal, because that gives a lot of motivation, lot of experience, and it is something which is a chartered accountant is expected to. So with this opportunity in hand, I request all of the members, the young members, to really come forward and take up this opportunity, and for the older members to encourage the young members and their office colleagues to come and participate. It's a very good opportunity to learn without any downside. When in real life, if you lose a case, it could be it will be painful, but here, even when you lose a case, you will get some experience, you will get a lot of things to learn. So with this, request everyone to please encourage people to participate in this, and not even for the participating teams, but others also should join and witness the tribunal proceedings. It is like a real life competition that's going to happen. Yep, sir.
Yeah. Good morning, friends. As my co-convener Pankaj Sanchaiti said, nothing more to say, but only the thing is, this is the fourth time we are conducting this moot tribunal. The charming points of this moot tribunal is, it is by the members are live members. Whoever is in the bench, present bench, they are sitting on the moot tribunal benches. So it will be like, you feel that it will be a real arguments is going on. Only the difference between the real tribunal and moot tribunal is only order. Order will not be given here. There we will get the order. So the age limit also we have kept, because to encourage the young students and young professionals, to give the encouragement, we have kept this age limit is as 25 years. 35 years, okay. So I request all the young members to participate in the competition, or else please attend and get the courage, so at least next time you can appear before the moot tribunal. So this is my request. So I expect a lot of members will come and attend the seminar. Thank you.
Thank you.
Pankaj sir, I am sure under your leadership, mid-tribunal will further take the glory of tax bar to the next level. Request all of you, there is a stall backside after maybe during the time after session is finished. You can go and address, take the pamphlets. You do register there is a scanner. You can complete your registration because we have very limited seats. We cannot allow maximum number. So please do register immediately to take the privilege. May I request Madhusudan Bojja, just take 2 minutes and explain what you want for members directory, please.
Yeah, good morning, friends. Very good morning, professionals. Yeah, it's current team has taken a decision to bring out the directory. Because 20 years back, we have come up with a directory like this. Many members are not there here in this directory. Because that reason, what we thought, we'll come out with a directory, one a dummy with multicolor and 70 GSM paper we are using. And already circulation has been done to all the members. Especially, I need information to be updated. Backside, our team is working. Please go verify your address, mobile number, email ID, so that it will not be misprinted. Because it is directly once in a lifetime. Maybe next time, maybe 5 years or 10 years they may take out. And I'm happy that one, Satish, brother of Amrut, has confirmed with 50,000 rupees just now that bookmark. Back inner page is confirmed, and first page confirmed, backside confirmed, and last page one confirmed. Now we left out with back page and back inner, 2 lakhs and 1 lakh. Please grab this opportunity. Just now we are talking to the tally people also. Probably my president will take the lead in finalizing this issue. And 10,000 is a full page, my dear friends. Please support us. So that we wanted to create some corpus to the organization. This is our aim. And thank you, President, for giving the opportunity as IPP and as the chairman of this directory. And I thank all the entire team members of GC. I have taken some few members for coming forward and supporting us. Thank you very much.
Bojja Madhusudan, IPP, mentioned that this project is almost after 17 years, right? Somewhere it was 2007. Right. So request all the members, there is again a stall, you can take pamphlets, you can find out what are the advertisements available, but it's a very good opportunity, almost 900 to 1000 members office premises, this book is going to be displayed. So it is an advantage for your clients. So we are printing almost, it's not 2000, 3000 copies we are printing. 3000 copies, each member will get all different past president, tax officials, it will go everywhere. So please see that it's spread in the community, clients community, and see that the good advantage is being taken. And before moving further, the format of the session is that initially we have speaker session, then there is a panel discussion as advised by our advisor Ramdevji. This time we are going to handle question answer session through a panel discussion. So reserve all your questions. Maybe you can write on a piece of paper and you can circulate to the panel. So we have 4 people sitting in the panel. So each one will be addressing on different topic apart from Prasad sir. So this is what the format of the session. So in between, maybe you can interact with the speaker if he permits. Otherwise, hold on, write your doubt on a piece of paper, and at the end, during the panel discussion, we will try to discuss. Now, may I request our treasurer, Ashish, for the pleasant task.
It is my privilege to introduce our today's speaker, Mr. P.V.S.S. Prasad sir. Mr. P.V.S.S. Prasad is a practicing chartered accountant and an information system auditor, and is a partner of Messrs. Prasad and Prasad Chartered Accountants since 1986. He is the past chairman of Hyderabad branch of Institute of Chartered Accountants of India. He is the past president of AP Tax Bar Association and past chairman of International Fiscal Association Hyderabad subchapter. He is the past member of Executive Committee of International Fiscal Association India branch. He co-authored a book titled International Taxation, a Basic Study, published by Book Corporation, Kolkata. He was appointed as one of the branch reporters for IFA Congress 2010 that was held at Rome, Italy on the subject tax treaties and tax avoidance, application of anti-avoidance provisions. He was chairman of All India Federation of Tax Practitioners South Zone for the term 2010-11. He was co-opted member of Committee on International Taxation of the Institute of Chartered Accountants of India for the year 2016-17. He was invited to speak at IFA Asia Africa Conference held in Mauritius in May 2012, May 2014, and May 2016. He was invited as a panelist at Asia Pacific Regional Tax Conference 2016 held in Seoul, South Korea in May 2016. He was a co-opted member of Committee on International Taxation of the Institute of Chartered Accountants of India for the year 2018 and 19. He is elected chairman of IFA India branch for the term 2023 to 2025. With this brief introduction, I present to you Mr. P.V.S.S. Prasad sir for analysis of Financial Bill 2025.
On and request the hotel team to stop the breakfast because it will be disturbance, and request everyone to come and settle down, and please put your mobiles in silent mode because next 1.5 hours I'm sure there is a huge take home for this budget, and we have a very good speaker, and very happy to see that very senior most chartered accountants have come and sat. Of course, that is the goodwill of our speaker. The moment his name is announced, there is a huge message circulating in the group that I know Mr. Prasad. Sir, very happy to invite you as speaker, sir. Thank you very much. And now the floor belongs to you, sir. Thank you.
Tax Bar Association, Mr. Hitesh Jain, Secretary Vemula Chandrasekhar, my good friend and advisor to Tax Bar Ramdev Bhutada, Amrit Kumar Kota, Pankaj Jain, Sambamurthy. I have to name all the participants because all of them are known to me so well. And it's like a homecoming back to Tax Bar. In 2000, I was president of Tax Bar along with evergreen jubilant R.G. Sarada as secretary. Ram Gopal is very close to my heart. Of course, he is not in the gathering today. We both were at the Tax Bar Association as president and secretary. So it's a real pleasure coming this year for the budget analysis, more so on the finance bill connected with direct tax proposals. It's a pleasure to be here. And in fact, as you know, nowhere in the world a budget or precisely the finance bill is deliberated so incisively as we do in India. In fact, there's a festival we celebrate every year with the brainstorming sessions. So every year there is something in store for us to discuss, and every one of us thought as the new income tax bill is round the corner, there would not be much in this finance bill, but always the finance bills are deceptive in throwing some important amendments, and this is not an exception. As mentioned by the earlier speakers, this budget is really a signpost to reach out to our stupendous goal of Viksit Bharat by 2047. And in fact, the approach has been very focused by the Honorable Finance Minister, identifying 4 powerful engines to stimulate the growth of the economy. Agriculture, MSME, investments and exports. As rightly listed by Mr. Hitesh, the transformative reforms are first aimed at reforming the taxation rules, followed by power sector, urban development, mining, financial sector and the regulatory reforms. Undoubtedly, the present government has been extremely focused in achieving ease of doing business. And in fact, recently on 11th of January, as IFA India chairman, we have hosted a conference in Gift City, Ahmedabad, wherein again the 50% of the participants were youngsters, and Dinal Shah is a past Central Council member of the institute, is also part of the IFA India Executive Committee, and he has arranged the whole conference and put in a lot of efforts where 110 participants attended. And Gift City is being showcased as a very important destination for the foreign enterprises to invest in. And in fact, the Honorable Prime Minister, when he was Chief Minister of Gujarat, this exercise started way back 20 years, and any financial center to take a shape, it will take its own time. I think now it's on the right path, wherein there are some proposals in this finance bill which we are going to discuss. And in fact, it is very, very heartening to note that the Honorable Finance Minister mentioned the spirit and approach of the tax department should be trust first, then only scrutiny next. So I think that spirit has really paid off in bringing the updated return provision, which has met with very good response of as many as 90 lakh taxpayers availed the updated tax return provision and revise their incomes. So with this background, in this backdrop, I think there is a provision now dealing with the updated returns amendment as well. And the new income tax bill, which was also tried by the government in the past, could not take a final shape, but now it is very certain, because they tried their best to bring the bill along with the finance bill, but they took another 1 week. I think it's going to happen. It has been promised that in terms of size and the comprehension, it would be half the size and it would be easy and lucid to read and understand. Let us hope that's going to happen. The award objectives of the new bill is to create tax certainty, especially for the non-resident investors, where we are pitching for large investments into India. But India is in a big race now, as you know, the 4th largest economy, and is going to overtake Germany very shortly. And it's not very far that we are able to achieve the 5 trillion economy. In fact, the digitalization is helping in a big way. As you all know, the UPI and the payment platforms you have, even a fruit vendor has a QR with him to offer to his customer and get the payment done. That is the level of digitalization, that's what is happening, which will definitely ensure that the economy is going to achieve the required objective. So in this backdrop, the Finance Bill 2025, I'm going to deal only with the direct tax proposals. What is proposed and how we are going to understand the proposals. Let us make a sincere effort in getting into the same. I think someone will help me with the presentation. So in fact, playing into the gallery, what was largely expected has been really announced by the Honorable Finance Minister, making the taxpayers' income tax-free up to 12 lakhs, with a provision of rebate 87A increased to rupees 60,000, and you have a marginal relief to operate to administer this provision. And quickly running through some of the important amendments proposed, the startups industry is always being pampered in a big way, which is really paying off, because we have unicorns coming from the startup industry like Flipkart, which was acquired by Walmart in a big transaction deal, and you have other unicorns like Paytm, Voyo and others. So there is always a sustained approach to promote startup industry. In fact, a fund of funds of 10,000 crores is specially announced to promote the startup industry. And the eligible tax incentive in the form of 80 LA and other tax concessions are continue to exist, and also the eligibility to claim the tax holiday in for a startup. 80 LA, I'm sorry, it is with reference to the IFSC Gift City. Here it is 80 IAC. The incorporation date of the startup has been extended up to 2030. And redemption of ULIPs where the premium is more than 2,50,000, there is a ambiguity which has been set at rest by holding that to be a capital asset, and the computation has to be a capital gains computation. In fact, there has been a lot of tinkering with the charitable institution law from last 3-4 years, as you know. The norms have been tightened beyond the reasonableness, there is no doubt. Now there is some sort of relaxation in this budget, especially keeping in view small trusts where they have a total income before applying section 11 and 12 less than 5 crore or which does not exceed 5 crore. There is a relaxation that the registration granted is not for 5 years, it would be up to 10 years. As you know, in the past, that is 20-25 years back or 30 years back, when we go for a 12-year registration, once you achieve the registration, it is there for the life, unless it is abused by the trustees or the organizers. In fact, there was a debate before the courts of law that when once a trustee is registered, there is no way, the commissioner has no power to cancel the registration. But of course, all those were addressed because there was an abuse by the organizers of the trust. And then there is a carrot and stick approach now to ensure that trusts are managed really promoting the objects for which they are established. So we have that provision stating that once the registration is given for a smaller trust, it would be for 10 years and not just 5 years. And now India is seeing number of corporate restructuring deals, and in fact many of our consultants are deeply absorbed in that because Indian economy is experiencing number of deals. So in this corporate restructuring or amalgamation, there is a amendment stating that when once amalgamated company comes into existence, that is the successor entity, the carry forward losses can be availed overall for a period of only 8 years. It is not that once the successor entity takes over, it is a fresh lease of claim of 8 years for losses to be set off again. There is a hue and cry, and of course there are some issues which I will discuss as we go into this specific provision there. Coming to the transfer pricing provisions, I would also explain what the basic transfer pricing provisions are for the benefit of one and all who may not be practicing transfer pricing. For you to know, because now the days are not far off, even Taj Mahal Hotel will open a branch in New York. Sarvan Bhavan has got branches across the world, that is the Chennai. So it is not a rocket science where you should think that international taxation is not my cup of tea. It is not your cup of tea, but it is the cup of tea of your client. Then you will have to necessarily know what it is. So that way, transfer pricing provisions, there is a provision, there is a proposal that it can be the exercise of determining the arm's length price can be for a block period of 3 years. How it's going to operate, we will discuss. Of course, the tax slabs and rates have been revamped so as to achieve that a taxpayer would not be liable for tax up to 12 lakh rupees. If he is a salaried employee, up to 12 lakh 75,000 rupees, including the standard deduction. And the rebate has been increased to 60,000 rupees under 87A. There is always a controversy. It's not a controversy, it's very clear from the provisions that the rebate is not available with respect to incomes that are governed by special rates of tax like capital gains and all that. It is interesting to note that this issue has been brought before the Honorable Bombay High Court by the Chamber of Tax Consultants, stating that it is unfair to restrict the provision of rebate only to the regular and normal income in order to keep the special rate income or the incomes that are governed by special rates out of ambit. In fact, it was ruled in favor of the SSE by the Bombay High Court, which is just reported on 25th of January of this year. And in fact, my associate Ram Prasad has been very helpful in preparing this presentation, and he is the one who made the research and pulled out this recent case law pronounced by the Honorable Bombay High Court. Coming to the saving schemes, the National Pension Scheme has been pampered in a big way, promoted in a big way by the government. Originally, the NPS was available only for employers like government, central government, state government. Then there are amendments made in the recent past to make it available to every employer. And there was also a lower limit of contribution of 10%, which got increased to 14% even in the hands of the private employers last year. And we all know that NPS Vatsalya is a specific scheme announced by the government last year to take care of the interests of the minor children. This scheme is applicable for 2 minor children of a parent guardian, and whatever that has been invested in the name of such minor would also come under the ambit of 80cc-D IB. Whether you get an extra 50,000, we will discuss. Apart from the threshold of 50,000 that is available to the taxpayer himself. any amount received by the parent or guardian on the most undesirable event of death of the minor would not be put to tax in the hands of the parent or the guardian. And we all know that national savings schemes was there in the past in 1992 when we have started the profession, and NSS was a big saving investment available, tax saving investment, and that has been dispensed with, but that deposits continued and the interests were paid. And in fact, government took a view that the interest payments would stop from September 2024. And thereby there is a representation made to the Department of Economic Affairs. If at all the interest payments are stopped, then we are forced to withdraw the money. We can't keep the money with the government. And if at all we withdraw, it should not be put to tax. The original scheme says when you invest, you are given tax exemption, but when you withdraw, it is taxable. So, on the basis of the representations made and on the basis of suspending interest payments against the NSS deposits, it has been in line with the same proposition. It has been proposed now that any withdrawals from NSS account after 29th August 2024 would not be liable for tax in the hands of the taxpayer who withdraws those amounts. In respect of house property income, you all know that the self-occupied property is always, the annual value is nil. In addition to that, as per section 23 subsection 4, the claim of nil value for the annual letting value is allowed for 2 house properties with a rider there for you to prove for the second property that it could not be occupied on account of your employment being away from the place where your house is located, or on account of your profession or business being pursued at a place other than where the property is located. But now that condition has been withdrawn, dispensed with, and for any reason, whatever may be the reason, if you are not able to occupy, the annual value being nil is available for 2 houses without any whisper. And then there is also a question from our team yesterday when we were discussing about the budget proposal. If at all the house is partly let out and partly self-occupied, whether this partly self-occupied would be treated as one house or not. In fact, there are cases for and against the SSE in the context of rollover benefit under section 54, whether partly occupied property would be treated as a full unit or not. I think by and large the cases went in favor, counting that as one unit. And then the updated return, which I have mentioned in the highlights of the first 1 or 2 slides, is a real progressive step provided for the taxpayers to come clean. If at all they have missed out reporting an income, to avoid the penal consequences, they have brought in this 139(8) capital A updated return as a new concept in the earlier budgets. As you know now, the time limits have been slashed. Even for a revised return, you hardly have 2 or 3 months, depending on the nature of your business activity. If July is the threshold for non-business or non-tax audit SSEs, and then you have tax audit SSEs, then you have transfer pricing audit SSEs, all that would go on up to 30th. And the available time limit for revised return is only up to 31st December, as I understand. Unlike in the past where you used to have the belated returns, 139(4) used to go for almost 1 year. All those things have been dispensed with. So in the backdrop of this scenario, there is a window opened in the form of an updated return, which you can avail within 2 years as per the existing law from the end of the assessment year. The first year you have to pay additional tax of 25%. If at all you are filing beyond 12 months and within 24 months, you will have to pay 50% as additional tax. And whatever tax, suppose you have to pay 100 rupees tax, you have to pay 150. So this window has been further widened to 4 years, 48 months, with 60% tax in the third year and 70% tax in the fourth year. If at all there is any notice received for the reassessment proceedings from the assessing officer under 148A, then you are deprived of taking recourse to updated return till it's proved by an order under 148A3. AO comes to a conclusion that it's not a fit case for reopening or reassessment. Then in that scenario, which can happen only in the fourth year after 36 months and before 48 months, then if at all your case is dropped as not being a fit case for reassessment under 148A3, then the SSE would still have an option to go and avail the updated return. So there is a question whether you can file more than one updated return. So it's clarified in frequently asked questions. This is one good phenomena. You have frequently asked questions released by the government along with the finance bill on each and every provision or specific topic, which will guide a great end to avoid any interpretative gap of understanding. So frequently asked question 27 clarifies that you cannot file more than one updated return, whereas you can file an updated return even after filing a revised return. Kumar Jagdish Chandra Sinha, the erstwhile 139(5), we have the Supreme Court judgment when you can file a revised return and all that. So now the revised return window is also with a short time limit, as I mentioned earlier. So though you have filed a revised return, still you can update it under 139(8)(a). Coming to this unit-linked insurance plan, which was hitherto exempt under section 1010D, there was a rider brought against all the insurance policies that the insurance premium paid should not be more than 10% of the capital sum assured, and also it should not be more than 2,50,000 annual premium. In fact, the life insurance policies which get matured, now we have taxability if these conditions are not fulfilled, and there is an uncertainty with reference to the unit-linked insurance plans in which bucket it would fall and how the taxation has to happen. If at all you are getting maturity proceeds of an LIC which is not fulfilling the conditions and becomes taxable, it goes as an income from other sources. But how to compute a ULP, because it is linked with the units. Now it is clarified in those cases where the premium is more than 2,50,000 and which is not covered by the exemption of 1010D, then the same is to be treated as a capital asset and the capital gains provisions would apply. And it is akin to equity oriented fund under section 112A. Thereby you would have the same approach to decide whether it is a short term or a long term capital asset, depending on the holding you have with respect to the ULIP. And coming to this carry forward of losses, as I mentioned earlier, in case of amalgamation of or business reorganization, the period of carry forward loss was always blissfully taken as a fresh lease of 8 years in the hands of the successor entity. Marshall and Sons, we have the Supreme Court judgment wherein it was ruled that appointed date, which would be approved by the High Court at a later point of time, as we all know, the amalgamation takes back to the date, that is the appointed date. So that has been confirmed by the Honorable Supreme Court as the effective date of amalgamation. In a case where the appointed date is going to fall before 1st April 2025, that is not being affected by the assessment year 26-27, whether we still have a window to go and claim a fresh lease of 8 years claim is what is being debated by the professionals who are deeply absorbed in M&A deals. Because the NCLT order and the whole process, as you know now, that is one issue which needs to be clarified, because in right earnest the amalgamation is deemed to have been completed before the date of proposed amendment. And coming to this International Financial Services Center in Gift City, Ahmedabad, Gandhinagar, I want to give some background about this for the benefit of one and all. And in fact, this has been projected as a very, very important project for the government. As I mentioned, when the Honorable Prime Minister was Chief Minister of Gujarat, it has been proposed. And in fact, the dream is to have this gift city, it is called Gujarat International Financial Services Center. This is gift city, should really compete with the large IFSCs across the world. You all know Netherlands is a very important tax jurisdiction, and similarly we have Singapore, we have London, and we have other centers as International Financial Services Center. The whole concept is, it is like a bonded area wherein it is the unit located in IFSC is to be treated as a non-resident for the purpose of FEMA regulations, extant regulations. And you are allowed to freely trade in foreign currency, convertible foreign currency. And a unit in IFSC is under an obligation to maintain its balance sheet in US dollars. Of course, the unit is allowed to maintain a rupee account, which should again be freely convertible. And we have the present gift city in Gandhinagar, Ahmedabad, as a multi-services special economic zone registered under SEZ Act 2005. So, which is attracting investments from non-resident investors across the world. And you are doling out so many tax incentives to promote and attract investments into gift city, especially for the offshore banking and even stock exchanges from the other countries are being set up. Foreign universities are likely to come up in the gift city, and there is a huge canvas and promotion for this. Karthik Rajaraman, a retired IAS officer, is the chairman, International Financial Services Center Authority in Gandhinagar, Ahmedabad, who came as a chief guest for our IFA conference on 11th of January and explained how Gift City is operating. a chartered accountant, my name Deepesh Shah, is the Director of Finance, Gift City, who came and was one of the speakers, explained how Gift City is throwing opportunities to professionals in serving the foreign clients who will set up their shop or unit in the Gift City. So that way, it is not that you need to ignore and forget about it. There would be an inquiry from your own client stating that I want to start a unit in the Gift City. You must be well equipped to help him out in doing this. The sunset date has been extended up to 2030. Another 5 years extension has come. Originally, it is supposed to end by 2025, which got extended up to 2030. Proceeds received on life insurance policy obtained from insurance intermediary office in IFSC shall be exempt under 1010D without any riders or conditions, like your 10% premium should not be more than 10% of the capital sum assured and all the 2,50,000. These conditions would not apply. And section 10(4)H has been amended so as to provide transfer of equity shares from domestic companies engaged in ship leasing, because aircraft leasing is one of the important activities that is promoted in the Gift City, and even ship leasing has been added to that. And then we have advances or loans between finance unit in IFSC acting as a treasury center and listed on the foreign stock exchange, and any loan or advance given to the other unit is not to be treated as deemed dividend under section 222E. And we also have non-deliverable forward contracts offshore, and income from such is going to be exempt. These are some of the few additional tax incentives that are provided in this finance bill. As you know, family offices, they are actively planning. Family office is a setup for high net worth individuals or large industrial group promoters like Ajim Premji. They have a trust called Premji Invest. So, and even Hyderabad, we have got some family offices, and Hyderabad is a very fast growing high net worth individual center, and these family offices are also likely to be set up in Gift City, and they're all waiting for some RBI clearances and clarifications. So that way, you need to be aware of what Gift City is and how it's going to operate and how you are going to advise your clients depending on their requirement. So this I have already explained to you. Coming to the charitable institutions, for small charitable trusts and institutions where their income does not, income before application of section 11 and 12 does not exceed 5 crore, there is a window now to have the registration for 10 years to go. It's not 5 years. And then we have some reference to a person who made substantial contribution to the trust are also treated as persons with vested interest, and thereby if any payments are made to such persons, it would come under scanner so as to deprive the exemption under section 11 of the Act. So there we have some issues which are really bothering us, which we need to address, like a person who has substantially contributed was tagged with a small contribution of 50,000 in the past, which has been increased now to 1 lakh, and the overall aggregate contribution should be 10 lakhs in the past, all put together including the contribution of the current year. Then he would be treated as a person who made substantial contribution to the trust or institution. And there was also a tag of any relative of such person. As how we have a relative of the author of the trust or the trustee, the same tag is attached to the relative or concern in which that person who made substantial contribution is also to be brought under the scanner, which has been untagged now. and relative link and the person, I mean the concern in which such donor or the substantial contributor is associated is not to be brought under the scanner. And if at all any payments are made to those relatives or in concerns, they are not to be brought under the scanner for depriving the tax exemption status. And also, coming quickly, under section 12AB4, the rigor is very harsh, stating that if at all you make your application for registration, even an incomplete application, if at all the application is having incorrect information, not incorrect, I would say false information, then definitely you deserve a punishment. But not a case where the application is incomplete out of inadvertence. You cannot punish or penalize such trusts of depriving the registration as a whole. That has been softened now, and such incomplete applications need to be completed in a time frame as prescribed in the rules, so that you will not have the adverse consequence of having the trust registration rejected. Of course, here, though it's not part of our syllabus today, I would alert all of you on the concept of general public utility under section 2, I think 32 or something, the subsection, general public utility. Ahmedabad Urban Development Authority's case decided by the Honorable Supreme Court in 2022 is a far-reaching consequence. And in fact, Institute of Chartered Accountants also is a party to that decision, which was argued by Arvind Datar. And Board for Control, BCCI, Board of Control of Cricket also is part of that, but the first name is tagged as Ahmedabad Urban Development Authority. The then Chief Justice, with a, I think, 5-bench, ruled that if at all the commercial element, that is, if you are selling some tickets and making money and conducting some activity, of course, maybe in line with the object you have, you must be extremely careful. You should not generate huge surpluses. If at all you are generating huge surpluses, you are in for a trouble and the registration can be cancelled. And in fact, Institute of Chartered Accountants has been specifically warned by the judiciary, please don't accumulate huge surpluses. It would deprive you of your tax exempt status. This is the case is argued by Arvind Datar. And in the same year, you have 2 more judgments of the Honorable Supreme Court. Please bear it in mind, the concept of general public utility must be very carefully administered in the hands of the trusts and associations who are going to enjoy the tax exempt status. And we also have presumptive taxation provisions in the form of 44D onwards. We have 44 not D, it is B, BB, like that. We have number of provisions for the non-residents activity which can come under the presumptive taxation. There is a new provision that is added in the form of 44 BBD, so as to cover the activity of a non-resident in the business of providing services or technology to resident company establishing or operating electronic manufacturing facility or connected facility for manufacturing electronic goods. The presumptive profit would be calculated at the rate of 25%, received or receivable or paid or payable by such non-resident. Subsection 3 of that new provision says, unabsorbed, suppose this presumptive provision is opted by the non-resident after maintaining books of account for some 2, 3, 4 or 5 years, and you have brought forward losses and unabsorbed depreciation, there is no way you can adjust or set off such unabsorbed depreciation or losses against this presumptive profit. You need to bear it in mind. Coming to the transfer pricing assessments, in fact, the amount of litigation that is generated by the transfer pricing assessments is mind-boggling. You would see the adjustments in crores, never in lakhs, crores and crores of rupees. Even for small companies, they are slapped with huge adjustments. In fact, the most popular industries that face the transfer pricing compliance is the software industry and also the pharma industry, where you have your associated enterprises outside India. It could be a format of Indian parent having its subsidiary outside, or it could be a US or other European holding company having its subsidiary in India. As you know, as the human resource is very talented in India and is at economical price, the most popular revenue model we encounter day in and day out is the US or the European company setting up its subsidiary in India and outsourcing the software development services to the Indian entity. And this is the popular model which operates on a cost plus model. So you are the subsidiary of the foreign entity and you are insulated from the risks, and you are only serving your parent, that is like a captive service provider, and whatever cost that you incur, including the non-cash charges, are marked with a profit of 15%. Generally 10% is the good olden days, now minimum 15%, and we are suggesting the clients even 17 to 18% in the software industry. So here what is happening, you are a small software company in India with 50 to 100 crore turnover and serving your parent in US, and your performance is compared with Infosys having 1 lakh crore turnover, Wipro having 70,000 crore turnover, are large companies, and you are being slapped with adjustments running into double your turnover. And Nemichand is also there. He is fighting cases now in the tribunal, and he has won recently a case in the tribunal. Nemichand was with me for 4 years. So now even small companies are not spared. They are more into trouble now. So in this backdrop, first of all, what is the transfer pricing proposition? Suppose you have a subsidiary in Singapore where the tax rate is 17%, and you have transactions happening with your Singapore company. There is every motive for you to sell goods or services at a lower price and buy goods or services at a higher price, so as to shift the profit from India to Singapore, which is a low tax jurisdiction compared to India. So this is where each tax jurisdiction would like to pull up their socks and ensure that their legitimate tax revenues are protected. This is where the transfer pricing provisions came into the statute book in 2021. And of course, US-like jurisdictions, it has been there for the last 50 years or more. So every tax jurisdiction now would like to protect their revenues. As I mentioned, even Saravanan Bhavan has got branches across the world. And then the Indian tax authorities would like to ensure that their legitimate share of tax is protected and it's not shifted to the other jurisdiction. This is the basic rule. Transfer pricing is not a rocket science. So this is for what? You need to establish that the transactions you have carried out with your associated enterprise outside India are at arm's length. What do you mean by arm's length? Is at the same level what you would have done even with an unrelated party. It's not so easy to establish that arm's length approach in real. You will have the methodologies in chapter 12a, and we have provisions like comparable uncontrolled price method, you have got the resale price method, cost plus method, and you have transaction net margin method where the net margins would be compared. and you try to establish that I performed in comparison with the similar companies in the industry. You have the databases like P.V.S.S and Capitaline, where you will have the data of around 15,000 companies, their annual reports, and their. So you will try to compare yourself and establish that your transactions with your AE no way resulted in any manipulation, and thereby the report of profit is at the arm's length, that is the comparable market standards. So this is where almost every year these companies are coming for scrutiny. As you know, in this faceless era, it is only the transfer pricing wing you are summoned in person for the hearings, and also the central range where the search assessments are happening. All other assessments are happening in the faceless mode. So this is where we are having huge concerns, and small taxpayers are put to hardship every year. Every year you have to go and establish your arm's length standard with respect to the transactions you carry out, even though the same set of facts and circumstances prevail in the subsequent years. So that is where now the government is coming out with a concept of block assessment of 3 years. Block assessment means it's not like chapter 14b, but 3 years if the circumstances and facts remain the same and the transactions are of the similar nature, then an SSE is given an option to go before the transfer pricing officer and give the facts for the subsequent 2 years and the data, and plead for a similar arm's length price determination, so that you will not have to run the scrutiny hardship again for the next 2 years. But it is not so easy as it is presumed. But of course, the proposal is a welcome proposal. How it's going to be implemented, we have to see. Suppose this year, just on 27th or 28th of January, we have finished our TP assessments for this season, and the same approach again is there for the next year. Already notices have been served in various cases who have undergone the scrutiny this year. So now this new concept of block assessment, the moment your ALP is approved, very rarely you are getting a nil adjustment orders. If at all it has been approved on account of your presentation and facts and the other methodology you used and all that, then you can come up with an option making an application in the form and manner to be prescribed, stating that the next 2 years transactions are also almost identical, similar, and thereby the same approach of ALP computation should be applied for the next 2 years. So this can happen only, according to me, as I understand from the proposal, this year's assessment must get over. Then only he will be able to understand, and you will be able to understand whether your transfer pricing study demonstrating that your transactions are at arm's length has been approved or not. If at all it is approved, or even if it is not approved, there is a very minor adjustment, then you are ready to take the same level of PLI, profit level indicator, for the next 2 years. Then you can go for this option and go before the transfer pricing officer, where he will verify the facts and data of the next 2 years, and then he approves your option to be a valid proposition. So if at all he approves your approach to be valid, then it would apply for the next 2 years the same approach, so that you are obviated from going through a scrutiny again. And if at all the assessing officer by any chance has made he has to recompute on the basis of this option approved by the TPO. How this is going to operate in real sense, we will have to see. There is also a specified domestic transaction. International transaction is in the context of 2 tax jurisdictions, India and a foreign tax jurisdiction. Specified domestic transaction is in the same country where you have 80IA provision or SEZ tax holidays, where you have a tax holiday unit and non-tax holiday unit. The transactions between the non-tax holiday and tax holiday units are also under scrutiny, like international transactions. These are called specified domestic transactions. So both specified domestic transactions as well as international transactions come under radar of this new block assessment system proposed, and we'll have to see how this, for this purpose, new subsection 3B is proposed to be added to section 92 CA. And definitely it's not applicable to search assessments or search where search is conducted. And then let us quickly go through the TDS provisions. There is an effort from the government realizing and appreciating the hardship being faced by the SSEs. As you know, TDS is a provision where you are serving the government. You are doing their work, trying to withhold taxes against every payment you make, and trying to religiously deposit the deductions in the treasury on time, failing which you can even be prosecuted. So this TDS mechanism, which is greatly helping government in realizing tax collections in advance, there is a rationalization of the TDS provisions since last year. And as a continuation to that, these threshold limits have been revamped more so in the hands of the senior citizen. Up to 1 lakh rupees of bank interest, you don't need to have any tax deduction, and there is no requirement for you to give the form 15H or something. Okay, so this is the table which I am not going to explain. Of course, one important thing is the 194I rent. Now in the backdrop of rents being increasing from year after year, and now it is the 6 lakh threshold which is applicable to 194I as against 2,40,000, which is a welcome proposition, there is no doubt. And even 194J, it has been raised from 30,000 to 50,000. And then we have, coming to the TCS, as you know, along with TDS, TCS also has expanded its wings in a big way. There are some areas where TCS provisions will operate and TDS also will operate. In respect of sale of specific goods, we have 194Q, and also we have 206CIH stating that the seller has to withhold, collect taxes of 0.1 or some percentages there. So where there is a double application of TCS and TDS, now it is wise enough to withdraw one, that is the 206CH, that is the TCS provision has been withdrawn in the context of sale of specified goods more than 50 lakh rupees, and then that's a welcome proposition. And LRS scheme, liberalized remittance scheme, is originally meant for parents to transfer monies to their children who are pursuing education outside or for some medical needs and all that. Now LRS has become a big window for some of the high net worth individuals using that for the investments in real estate, investment in businesses outside. Of course, so many restrictions have come under the Foreign Exchange Management Act with reference to the overseas investments as well vis-a-vis the LRS provisions. And also to keep track of the LRS payments beyond 7 lakhs in the past, which 7 lakhs is now being increased to 10 lakhs. And the percentage of tax deduction has not been reduced 20%, which continues, but the threshold of 7 lakhs has been increased to 10 lakhs now. And there are some exemptions with reference to that. If at all you are using for medical or education purpose, it is not covered. And if it is, if you are funding out of a loan taken from a financial institution also, which is as per section 80E, then also you are out of TCS application. That is what has been proposed. And coming to these non-filers, there is one very impractical provision in the statute book 206AB. 206AB says you are deducting taxes and you will have to inquire the filing status of the deductee. Can you do that? Can you ask your deductive, have you filed your tax return? He will say, please mind your business. You want to deduct tax, deduct it. If you can, if you don't deduct, I will be very happy because he has nothing to lose. But everything the deductor has to lose because there would be a disallowance. And he would not tell. This is very impractical. See, I tell you, when it comes to the question of tax residency certificate, our revenue authorities had the audacity of prescribing the format to the foreign tax jurisdictions. What format you have to follow? Then they said, they used their own language and said, forget about it. Because they don't use plain language like us Indians. So they said, forget about it. So then they realized after 2 or 3 years, then the tax residency certificate only, here the deductor has to put those details in the format and give it here. That is how we have to comply. You see, you can't make an extraterritorial. Already you are taking care of the Indian citizens. You have no jurisdiction over the foreign tax jurisdictions, no? So, that way, the approach is also evident from some of the provisions within the country, stating that if your deductee has not filed taxes, you will have to deduct a higher rate. If you don't deduct a higher rate, you will become an assessee in default. So this is a very impractical approach. See, you are doing the government's job and you are pushed to the wall, and making it more and more cumbersome for you is not in the right taste or right approach, which has been realized, though it is late. 206 AB has been dispensed with. You need not have to find out the filing status of the deductee. It is his headache to take care of his taxes. There would not be any higher rate of TDS or TCS you need to apply, which has been removed. A very thankful and a very welcome proposition. And coming quickly to the penal provisions, there are some tinkering making them more reasonable. You have a clarificatory amendment with reference to penalty under section 271 AB, which is more relevant to the earlier search regime, that is the 153A related assessments. Now, searches are now brought under the block assessment again, as you know. Block assessment and the approach of undisclosed income. You have the block assessment in the statute book almost for about 14 to 15 years, which has been dispensed with in 2003, if I remember right. And 153A provisions have been brought into the statute, which ran till 1 year back. And now the block assessment has come back into the statute book in the form of chapter 14B. And in between, when you have this 153A related, section 153A related assessments, we have a penalty in the form of 271 AB, which is not relevant in the context of block assessment. So that has been dispensed with rightfully for the searches initiated on or after 1st September 2024. An order imposing a penalty shall not be passed after expiry of 6 months from the end of the quarter. Now you would have observed they have taken more time for all the proceedings, the assessing officers or the tax authorities. It is not the end of the month, from the end of the quarter. So they have additional window of around 3 months. So 6 months from the end of the quarter in which connected proceedings are completed or order of appeal or revision is passed. And even 270 capital AA, that is misreporting or underreporting, there is a provision for you to claim immunity. Such immunity has to be granted within 1 month from making the application. That 1 month, they thought it is too short a period, and it has been increased to 3 months. If you are a deserving case, then you will get the immunity from the application of the provisions of 270 capital A. Hope I am able to reach out audibly. I think there is no echo and all that. If there is any trouble, please let me know. I always believe the mic system is the greatest savior, because all our efforts would be futile if the mic system is not if it's not properly organized by the, of course, the hall people. It is not in the hands of the organizer also. The other penal provisions like 271C, 271CA, 271DA, DB and E, all are hitherto were administered by an officer of the rank of Joint Commissioner, or it could be Additional Commissioner also. It could be Additional Commissioner and Joint Commissioner of the parallel rank, Additional Commissioner of more seniority. But the word used in the law is Joint Commissioner. So hitherto these penalties were administered and levied by the officer of rank of Joint Commissioner. Now the assessing officer is empowered to levy these penalties, of course with the prior approval of the concerned Joint Commissioner. That is what is the proposal that has been brought in. And the other highlights is this tonnage scheme, which is available for the shipping companies, is now proposed to be extended for the inland vessels. The government wants to promote inland waterways in a big way. As how you have transportation of rails, air transportation, railways, road transport, even the waterways they are promoting in a big way. So for this purpose, the tonnage scheme is being proposed to, is being extended even for the inland vessels. As I mentioned, chapter 14B, which has come back as a block assessment scheme in the case of search cases, you have the whole host of 158 BD and all provisions. But you need to understand there is a important change in the entire approach. Hitherto in the past, it was the undisclosed income which needs to be computed and brought to tax. It is not the undisclosed income now, it is the total income. Thereby, the approach what was adopted in the earlier regime of 153A assessments of computing the total income, including the undisclosed income, and that is where you have lot of dispute and litigation. The same wording are imported now into chapter 14B. This is the marked change compared to the earlier regime of block assessment and the current, because the total income approach has been brought in. And again tagged to a return filed under 139. See, the popular dispute before the courts is, in a search assessment, can you make a fresh claim of tax incentive? If at all you have not made the claim of ATIA, say in the infrastructure projects, can you make the ATIA claim? In our own case, I fought the case before Hyderabad tribunal in GKC projects, and which we have won, stating that you can make a fresh claim because section 139, it's very clearly the return filed under 153A proceeding is a fresh return as though you are filing for the first time. Of course, now against this, the special bench of Hyderabad, where KK Chaitanya advocate has argued the matter in KNR Constructions last year in 2024, they have given this benefit of making a fresh claim in abated assessments and not in unabated assessments. That is the difference. Special bench, and wherein President of the Tribunal Justice Bhadang and Mahavir Singh, and we have, I think, Manjunatha, these are the three members who sat in the bench and decided this issue. This is same way it's going to be relevant in all the search assessments under the new block scheme also, because block assessments are now targeting total income and not the undisclosed income. Of course, undisclosed income also need to be quantified, wherein we have the plethora of case law what is decided in the past will come to your rescue. And then any international transaction or specified domestic transaction carried out in the year of search, not the 6 years preceding the year in which the search is conducted, but in the year of search, if you have international transactions or the specified domestic transaction, they are not brought under the radar of the block income. They would be assessed separately. Of course, section 17(2) is being amended with reference to the perquisite valuation, because some 50,000 limit they want to increase it, and they are bringing out some new rules. Old thresholds have been revised. I think this is the last slide. Special significant economic presence. This is again section 9. We have the concept of business connection, where a non-resident comes and does business in India. You have the concept of business connection, and we have a parallel concept of called permanent establishment of a non-resident in India under the treaty law. Only when you trigger business connection in India as a non-resident, then only your activity in India would be exposed to taxation here. If you have carried out an isolated transaction or a stray transaction, it would not trigger any tax presence in this country. In the same manner, if the transactions are happening at a principal to principal basis, that means the exporter sits in Germany and exports goods to India, you receive as an importer. It is an export on a principal to principal basis, and which is not liable for tax in the hands of exporter here in India. But with such exporter in Germany comes to India or appoints an agent here to promote his business in India, and the agent is given power to conclude contracts in India in getting new customers, then definitely to that extent you need to identify that there is a business connection in India, and to the extent you have improved your business in India through that agent needs to be brought to tax in India. As an extension to this concept of business connection, there is also a concept which is brought in as significant economic presence. Actually, this concept is envisaged in the backdrop of digitalization of the commercial transactions. See, the significant economic presence would be more relevant in the context of Google and Facebook. Facebook might have lakhs and crores of users in India. The user base is the real backbone for Facebook in promoting its advertising business, even the Google. As users, you may not be paying even 1 rupee to the Facebook or Google, but this user base is very, very critical for them. And lot of analytics is done as to what your likes and dislikes. And this data is extremely important and potential for them to derive revenues in so many other ways. So when you have a user base in India, whether India has a right to tax that foreign company is the biggest battle now fought by the source jurisdictions like India. This is the biggest tax war happening, because you should know what is happening now. 145 countries have come together as an inclusive framework to say that these market jurisdictions, like where you have the user base, Facebook, every one of you are using Facebook, every one of you are using Instagram. You may not be paying 1 rupee to them, but your data is very critical. Google knows what you eat, where you go, what you do. Beware of Google. That is the amount of data they are collecting. Of course, my son works for AI. He is an IIT and not a chartered accountant. He works for Google in their headquarters and works for Gemini project, which their artificial intelligence project. It's highly confidential projects. They won't allow even government offices you can go, but not into the Google office. So the amount of data they are capturing is mind-boggling. So when India like country has got a tremendous user base, does it have a right to tax that foreign company like Google? Google can earn billions of dollars through Indian users without having their physical presence. See, the world international tax rules prescribe physical presence in India to be captured as a permanent establishment or a business connection. Without physical presence, with their technology, they can be omnipresent, and in virtual proposition, they can make billions of dollars. How to capture the legitimate tax share for this country? India is one of the front runners canvassing source rule from last 3 decades. India never yielded on the source principle even with USA, not now, even 89, 90, when India has concluded the tax treaty with USA in 89, when we were still more underdeveloped. And the negotiation with USA was done for 25 years, more than 2 decades, and to protect our taxing rights. So the same source principle, now they have ultimately agreed, all the 145 countries, that the market jurisdictions are eligible to claim a right of share, share of tax right. How this would be administered? Big Brother is coming in the way. Big Brother doesn't want their tech giants to share taxes in other countries. Out of the 11 tech giants, 9 tech giants are in US, like Apple, Google, Facebook. They don't want to. And even this government of Trump administration is not going to accept that. There has been an effort to bring this digital tax into reality from last 8 to 10 years, more so from last 4 years. Everyone is on the platform, but Big Brother is holding it. He doesn't want to agree to this. That's the reason India is also holding its feet very tight and stating that this is not going to agree for some global minimum tax proposition. Under the other proposals which are favoring US, it is accepting. Where they have to share taxes, they are not accepting. So why I said all this is an important development which all you should know. And this is where significant economic presence is a concept canvassed by India to bring digital tax into reality. You need not be physically present, but you are economically present here through your digital transaction. That is good enough for India to capture and make you pay tax. In that direction, we have got the equalization levy 1 for the advertisement revenues of the non-resident vendors like Google. But the equalization levy 1 again is making the poor Indian resident who is availing the advertising service is only shelling down that particular tax, because it's 195, you have to gross it up, because large companies, you can't bargain with them. They say, what you do, I don't know, you pay $10,000, you avail the service. So equalization 2.0, which has come into the statute book and has been dropped in the last budget, is with reference to the non-resident e-commerce operators. E-commerce, Amazon, you sit in home and going on using Amazon, Flipkart, and they are making billions of dollars. So in this e-commerce, non-resident e-commerce operator transactions are brought under the equalization levy 2.0, which has been dispensed with in the last budget, with a fond hope that this market share, that these jurisdictions of markets will have a right to collect digital taxes, which is not yet finalized. In a good hope, India has surrendered equalization levy 2.0, but the taxing rates of market jurisdictions have not yet been finalized. In that approach, this significant economic presence is a concept in section 9, which you can see. In that, purchase of goods should not bring a non-resident to tax, because purchase of goods is treated as an auxiliary activity. It is not a revenue rising activity. So that is the reason it should not be brought to tax even as per the international tax approach. The same thing has been brought in explanation 2A to provide that the simple activity of purchasing goods in India for a purpose to export it out would not amount to an exercise which would be brought under the taxation. So this is where I am forced to stop here, because for the panel to take over, already I have overshot time by 10 to 15 minutes. And in fact, there is one more thing, is the younger generation is aware of the virtual digital assets. You and me do not know, but The next generation, they are more into crypto assets. They want to buy, sell Bitcoin and all these things. And of course, Pankaj Jain has done a lot of research on Bitcoins and other things. We had invited him for the Institute conference on the international tax also. And we don't know where we stand today. Bitcoin is not a legal tender as per RBI. Be that as it may, we will not wait to tax it. See, one simple question I always ask my young friends, is there an underlying asset for the Bitcoin? No, it is all the speculation. The speculation bubble is going to burst one day. And US is always fascinated in promoting speculation. And this Bitcoin has gone in a big way. I think the Bitcoin value is very high now. 1 lakh. See, earlier we thought 60,000 itself was so high. Now it is 1 lakh. So, virtual digital asset is brought to taxation in India. And capturing these transactions is very difficult. That is the reason now the reporting entities have been obligated to give the data of the transactions to the revenue. Now a new provision, section 285AA, has been brought into the statute book from the assessment year 26-27 to give reporting. And in fact, it was also mentioned in the past that dealing with the foreign crypto exchanges making transaction, I think is against the provisions of the FEMA, if I am not wrong, for an Indian resident. But so many youngsters, without knowing, they are entering into transactions with other exchanges, foreign exchanges. In fact, cryptocurrency is a legal tender, if I am not wrong, in Slovenia. Slovenia is a legal tender. Europe. There are many jurisdictions where Pankaj Jain has to take one special session for you. See, don't be caught always with your regular routine mundane transactions. You must know what is happening. Otherwise, your younger generation will outbeat your knowledge within no time. So you must ask Pankaj Jain to take a session on cryptocurrencies, virtual, where we stand, we should know. Your son will say, I will invest 10 lakhs. He will ask you to give 10 lakhs and he will put it in Bitcoin. Today it is at 1 lakh, tomorrow it may come down to 10,000. So be careful, and you should know what is a Bitcoin and what is a virtual digital asset. This is where we stand. And in fact, in a very lighter vein, I always say, I would like to share a small anecdote. A delegation from Japan came to India long back, this is a old story, not in the current regime it applicable, but just in the lighter vein too, because we have been running through so many provisions and taxing our brain. So Japan, as you know, is a phenomenal country where the progress has been achieved in a phenomenal after the World War II. So a delegation from Japan came to India and visited a state none other than Bihar. This was long time, 30 years back, and they said, just give us 6 years and we will make Bihar Japan. Then Biharians are no less, they said, they responded to the delegation, you just give Japan to us, we will convert Japan into Bihar in 6 months. So that should not be approach, and our approach should drastically change and ensure that we are progressive in mind, and the digitalization is going to be a mind-boggling, and all transactions through your Paytm, GPay, everything is recorded. Please be ensured. Don't think that you will make GPay. Everything is recorded. You are supposed to explain everything. So that is where you are pushed to the digitalization. Good enough. GST has pushed you into the right compliance, and digitalization will do all the more. And be happy in the digital era, and be very, very careful. The cyber crimes are at the peak. The moment you take a call, the caller tune says there are cyber crimes happening every minute. Be very careful. Use PhonePe, GPay very carefully. And I wish all of you an excellent budget reading, and the discussion what we have started has given me an excellent opportunity to learn the law better and what's being proposed and all that. Thank you very much for an excellent and patient hearing.
It's a standing ovation. It is a standing ovation. Sir, thank you very much. Really, it is detailed presentation, class by class, in a simple manner, covering all the provisions. Thank you very much, sir. Sir, just relax. We require 2-3 minutes time for panel discussion. Request all of you to note down your questions. In the meantime, the sponsor Tally would like to give 2-3 minutes presentation. By the time, we'll arrange the tables. Yes, sir.
Sorry, Secretary sir. Please wait. This panel discussion is going to be more important rather than this presentation. So please wait.
Yes, please wait. It will be very interesting discussion that we'll be going to have. Now, can I request the gentleman Subramanyam Garu, Ram Subramanyam Garu, CEO of Asset Integrated Systems, top Tally's 5-star partners and their quality providers and their partner for 27 years along with Tally. So, give them a round of applause. Sir, now it is over to you. Please take. And request Raghu to arrange the panel. Right.
Good morning, everyone. It is pleasure to be here today with such esteemed gathering of chartered accountants. As a financial experts, you play a crucial role in shaping the business. Yeah, sorry. As financial experts, you play a crucial role in shaping business, ensuring compliance and driving financial efficiency. At Asset Integrated Infosystems, we share the same common goal with you to empower business with seamless financial and management solutions. This Asset Integrated Infosystem started 27 years back. We are serving almost 18,000 clientele, and we can do the customization according to the requirement of the clients. The more and more solution can be built on Tally. Now I request our business manager, Mr. Ravindra, to take over the mic to explain recent enhancements of Tally.
Thank you, sir. First of all, very good morning to the people who are here, and thanks to the entire Bar Association for giving this opportunity to present here. Special thanks to Vitish Jain sir and entire committee. Today, so I know the core agenda of the meeting, so we will not take much time. So we will take only 2-3 minutes time. So in this 2-3 minutes time, so I would like to take you all through what are the enhancement we have done in the recent past, which is very useful for the practitioners like you. Okay. So before I explain that, so I would like to introduce myself. My name is Ravindra. I am directly from Tally Solution. So I drive the business for Telangana and Andhra through partners like Asset Integrated, Ram Subramanian sir. So when it comes to the recent enhancement, so as you know, so Tally is there in the market from last 30 plus years. So serving almost 25 lakhs customers, or adopted by 25 lakhs customers. So these 25 lakhs came because of your recommendation only. So thank you for trusting Tally Solution and suggesting Tally Solution to your customers. So since you are suggesting, so it is also our responsibility to get the latest features which is required for the customers in day in and day out. So one of the enhancement what we have done in the recent past with our release 5.0, connected GST. Yeah, so connected GST means, so earlier if you want to do the filing part, so you need to export the GST report in a JSON format and you need to upload. So you need to come out from Tally. So that is a difficult process. So now with the release 5.0, so we have integrated with the GST portal Tally. So now you can easily upload your GST returns in the GST portal without coming out from the Tally. So and it is very simple, like how you guys are doing e-invoicing in a Tally. So it's just a one-step process. So not only uploading, you can also download, you can also do the reconciliation part. So whatever related to GST, so without going out from the Tally portal or Tally software, so you can do it. So that is one enhancement. So I think this is more useful for the practitioners like you. Okay, because for our customers filing, we are only doing. So it is very useful. And second enhancement with the recent, it is yet to release, release 6.0. So the beta version is going on. Okay, the banking connectivity. Okay, so now you can integrate your Tally with the bank. So as of now, 3 banks we are supporting: Axis Bank, Kotak, SBI. So 3 banks we are supporting. Beta version is going on. So if you want to explore the beta version in your live environment, so you can contact Subbu sir, Ramasubramanian sir. So it is very, simplified way we have connected to the bank. So your reconciliation part we have taken care. Your payments part we have taken care. So everything, whatever you are doing a banking related things, so you can say easily, you can do it within the Tally itself. So that is one enhancement we have bought in the Tally. So it is yet to release, I think in another couple of weeks. So it will be live. The beta version is going on. So beta version means it is 99% okay. So if any of your customers want to experience this release 6.0 in their environment, so you can contact our partner. So apart from the product, whatever enhancement we are doing, so we have also bought in 2-3 new kind of features. So that is WhatsApp. Okay, yeah, as you know, WhatsApp is the main communication thing we are using daily, day in and day out. So for your customers, so definitely to reach out their customers, the WhatsApp is the main medium. Okay, now with the Tally, you can do the whatever bills you are raising, you can send it to customers directly. So apart from that, you can use that WhatsApp as a marketing tool also. Okay, like you guys are receiving the promotional message from all these malls and all. So that is possible with some marketing tool with the WhatsApp. So that with our Tally with the WhatsApp, we are providing that also. Okay, and second thing, so cloud. So technology, so evolving every day in and day out. So we are also tied up with the AWS. So AWS is the leader in the cloud. Okay, so that means 99. They are giving a guarantee of 100% or 99.89 or 99 security reliability part. So we have tied up with such vendor, and you can access your Tally from anywhere using our AWS cloud services. Okay, so that is one thing. I am just covering the the outline part of it. So if you want more details, you can please contact our partner. Yes, sir. Okay, so benefits when it comes to the cloud, sir. So sir, for chartered accountants, already from the institute we have done a agreement. So any chartered accountant want to take Tally license, generally our multi-user cost is 67,500 plus tax. So you will get 50% to 80% discount. So depends upon the the passing year and all. So if you are 2018 before passed out, you will get a 50% discount. And if you are passed out after 2018, you will get 80% discount. So this is just right away you can avail.
That to those who are in the practicing, for them only they are offering.
Who are active chartered members. Yes, sir. Sorry, sir. Client reference we can discuss offline, sir. In terms of new license for your clients, sir. Sir, for clients, as of now, our pricing policy is very simple, sir. If any customer want to take in a bulk model about 10 licenses, we have a discount model. So we don't have any individual discounting policy, because since it is a volume business, sir, every day dealing with this price is very difficult, because every day our adoption is almost 50 to 60 licenses in the Telangana and Andhra. So
sir, request pricing and all you can interact with one-to-one, sir.
Yes.
Okay. Because
guarantee you, sir, through our whomever customers you are referring, so you can be rest assured the whatever implementation you are expecting, so whatever support you are expecting, so everything will be done at a 100% assurance. So that is one thing we want to give a assurance. Okay, so that's it from my side, sir. Any doubts are there with respect to pricing, with respect to product? We have a stall outside, so you can please contact or please visit our stall. So you can take a, you can give your feedback, you can give your suggestion with respect to product, or if your customers want any Tally or any support, that also you can leave a message at our stall. So that is one thing, and we are also having goodies. The kind of return gift. The calendars are there. So while you are going, so please don't forget to take your calendar. Okay. So yeah. So that's it from our side, sir. Thank you so much. And then second, thank you so much entire committee for giving this opportunity. So we will discuss offline, sir. Anything is there.
Thank you
so much.
Thank you, Asset Integrated Info System. Thank you, Subramanian Garu, for your support. We give them a round of applause, and they are available to you, and you can have a one-to-one interaction, and you can just take the benefits. So the panel discussion will be on now. The first panelist, may I invite the MSME expert, the past co-opted member of MSME Committee of ICI and past president of CA Institute Hyderabad branch, past president of Tax Bar Association, CA Amrut Kumar Kotagaru, please. With a round of applause. SME expert and transfer pricing expert. And just now we came to know he is a virtual asset expert also. Pankaj Z, please join onto the stage as panelist. Please. And no doubt, direct taxes, along with the direct taxes, GST also important. So we have with us GST expert, JC, CA Hitesh Jain. Please come on, join onto the stage, please. And request our today's speaker, Sri P.V.S.S. Prasad Garu. Please, sir. And to handle these experts, we need a master. He is none other than our past president of Tax Bar Association, our advisor to Tax Bar, and he is presently a co-opted member of Direct Taxes Committee of ICI. Ramdev ji, please, sir. And he is going to handle the panel discussion. Sir, now the floor is yours.
Thank you, Vemula. As just have been briefed by Prasad that he has to leave early. He was asking us to leave by 11:45. I would urge him to leave for another 5 minutes. Hello. So, please bear with us. We will be having some important questions. First, that's why I would like to ask few questions with the Prasad sir regarding direct taxes. Then we will go to other two aspects. Friends, first question from my side is, what was the most fascinating thing from the Union Budget 2025? What is the most fascinating thing?
Most fascinating thing is they are reposing trust in you. So you will have to live up to their expectation and ensure that your trust is not breached. So that is the most fascinating thing. And in fact, definitely the tax reforms, and let us expect the new income tax bill to be a very, very promising legislation which would create tax certainty and reduce litigation.
Thank you, Prasad sir. Before, I will not ask both of you now because Prasad has to leave. From my side, what I think is the most fascinating thing is government has foregone 1.2 lakh crore of taxes. Despite of that, they are maintaining and capping the deficit, fiscal deficit, to 4.4%. That is the most commendable thing in my view. How they will do?
No doubt, no doubt.
How they will do it? By reducing the expenditure or for borrowing, that is to be seen in the future. Now friends, regarding this another amendment bill which is proposed to be introduced, it is not a direct tax code as such, nor it is a new act. It will simply brought in the form of an amendment bill.
Correct.
Amending the present act.
Correct.
For simplification purpose, and this process is going on since past more than 6 months. Our institute is also involved in that, and we have given so many suggestions. Let us see how many of those will be adopted by the CBDT and Finance Ministry ultimately. Let us hope for good, because we are all hit severely with so many provisos. When we go to one section, one proviso is added to that. It is like a Hanuman Ji ka dum. There is no end. So, as time is constraint is there, sir, Prasad sir, if house is vacant,
How the?
house is under house property, house is vacant, its value, annual value is nil. This is a good thing that no reason is to be cited. Because earlier the reason to be cited for keeping the house vacant to claim its annual value at nil was to be given as for occupation purposes or for some other. But now it has been proposed that you need not cite any reason. So I am having a doubt regarding that. Have we ever asked by any department people to cite any reason? So if it is not asked, where we have to give reason? To whom? Please clarify.
No, actually in the past, there was a clear mentioning in the law that you would not have occupied the second property on account of your employment being outside the place where the property is located, or your business or profession is pursued outside the place where it's located. So that particular specific reason was alone accepted in the past, whether it was questioned or not. But now that rider has been removed in the very law itself. It's as simple as that.
That is what. Earlier also we are not reporting any reason as such.
Fine. But there was a right for the tax department to question.
Yes.
That right is now removed, and it's like a standard deduction as how you are getting, where you need not have to give any proof of expenditure against your expenditure as a salaried person. In the same manner, for two houses, the annual value is going to be null.
Thank you, Prasad sir. One important question I have regarding updated return, sir.
Yes.
Under 139(8)(a), now you can file returns up to 4 years, updated return.
Yes.
But the condition attached is if it is notice not issued within 36 months.
Yes.
Under 148(a), that is reassessment, initial notice. Suppose before issuance of that notice, 36 months, whatever is there, one has filed updated return, what would be the fate?
Fine, if you have already filed an updated return before receiving any notice under 148(a), and you should have ensured that your updated return would address all your items or streams of income, and there is no way you would be caught again by the reassessment or the 148 notice. If that is so, your return is valid.
Thank you, sir. That was my thinking also. And one more regarding charitable trust. It has been said that exception means relatives definition under 13(3), relatives are not substantially interested person, relatives are not covered by that. But what is the definition of relatives? Which relative we have to cover for that?
No, actually the relative definition is given in the Act at various places. First of all, the relative of a person who made substantial contribution is out of the radar. That is what we need to know.
Yes.
See, the relative of a trustee or relative of an author of a trust is still under the radar. But whereas relative of a person who made substantial contribution is a very undesirable reach they wanted to have, which has been dispensed with. They said it is not required. Same way, if there is a concern in which that person who made the contribution is interested, even if that concern has got some transactions with the trust, then also it is not under the radar. So only to that extent we are really, it's fortune enough to have this clarification done, because it would really disincentivize a person who is making contribution to the trust for the promotion of its objects, because you are bringing so many other restrictions and other things.
So this is fine, sir. We will take your question also. If anything is there, please give it in writing, because Prasad sir has to leave early. If anything is there. So regarding this incomplete application, it is, don't you think, sir, is it similar to curable defect?
Exactly. See, that is the reason incomplete application is being viewed liberally.
Yes.
They are not taking a harsh stand of rejecting the registration, like application with what you say, incorrect or false information. See, the false information is definitely you are guilty of it and you deserve a rejection of the register trust. But it is not the case of a incomplete application. Incomplete application, out of inadvertence, you have not given some details which are required to be given, which you will give it, and that is a curable defect. That is the reason the window has been liberally pruned down to keep this out of the harsh consequence of denial of registration.
Sir, regarding one doubt regarding 194I rent.
Okay.
It has been said that 50,000 per month, but annually it comes to 6 lakhs. Suppose in any month it is 55,000, in next month it is 45,000. Then what will be the impact of 194I on that 55,000?
That's a good question, because now they have tagged this limit to the month and not the overall annual. So if at all 45, see, generally it doesn't happen when you are receiving unless there is a change in the tenant, or I don't know, the premises is partially used by yourself for some time. Otherwise the rent would not come down in the normal circumstances. If at all the 45,000 is received for a lesser proportionate area, then probably I don't know how it has to be viewed. Again, then it may not fall under this thing, because 50,000 is tagged to a monthly rent, not the annual rent. As you say, the next month it would be 55. Overall, it may be satisfying the 6 lakh thing. But I would feel the overall 6 lakh limit also will help you explain your case correctly.
Otherwise, you will have to use your chartered accountant's brain, sir.
That is always there, no?
That 5,000 you will have to treat as expense.
In her speech, she said 2,40,000 is being raised to 6 lakhs. She said that in her speech.
2,40,000
is being raised to 6 lakhs.
Correct.
In her speech.
What, Sangha?
So I think that should be the rent of a person is paying 45,000. During the year, it increased to 55,000. So we are coming below the 6 lakhs, you may avoid. That's why the moment it crosses 50,000 a month, you start paying the rent.
No, exactly. That is one reason. And one more thing, suppose your tenancy starts on 1st of January and only for 3 months you have tenancy. Even for those 3 months, if it is 50 or more than 50, you need not have to 50 or less than 50. So you need not have to deduct taxes. That is the reason they are given a monthly rate. Yes.
Is it clear, na?
Yes.
Still, if you have doubt, please don't carry any doubt from here. Otherwise, Prasad will punch me.
No, all landlords are very clear.
If the tenancy starts in January at the rate of 60,000 per month, totaling the year it comes less than 2,40,000, is it not?
No. By you will calculate for those 3 months. No, first of all, they need not do. If at all it is only up to 50,000, it is 50 or less.
It is more than 50,000 for 3 months.
Then they have to do.
It is our unanimous understanding that as soon as this monthly payment payable or paid exceeds 50,000, TDS is required.
Exactly.
Simple. Now, sir, one doubt I have. This TCS on new vehicles exceeding 10 lakhs under section 206C1F, I think. Why, when they are exempting tax up to 12 lakhs, why can't they increase this limit also to 25 lakhs?
Is it for 10 lakhs or TCS
10 lakhs.
50 lakh?
10 lakhs only.
Okay.
So, isn't discriminatory? I think Anmantlu is not agreeing. Sir, it is not the question of BJP defending Nirmala Sitharaman. It is the practical question.
The 10 lakhs need not be tagged with your 12 lakh income. See, the 10 lakhs you would have brought it from your savings or anything. So that way, the 10 lakhs threshold they have put, I think even probably that would be liberalized further in the coming budgets, definitely, because 10 lakhs is nothing today.
No, my view is that when you are you are not taxing, exempting, I have used the wrong word. You don't want to collect tax up to income of 12 lakhs. Why you want to collect for vehicles up to 10 lakhs, any TCS?
Correct.
That should have been proportionately enhanced.
No, for them to understand, it takes one more year. So next year we will have something to discuss again.
That is fine, sir. Sir, in the meanwhile, one question we have got. I could have also answered, but he want to know from you. That's why he has sent this question.
One is self-occupied. Out of the two houses, one is self-occupied and other is let out, and the rent is also received from banking channels. Can the second house still be claimed? No. So when once, don't do any aggressive planning. See, gone were the days you are trying to do aggressive plannings. You leave it. Try to grow big. Try to earn 10 houses. Not trying to earn 10 houses. And it is possible now. You can do it. What your father didn't do, you will be able to do. What you could not do, your son will do. Okay? Be progressive and come to consultants. You should say, come to a consultant with a fees of minimum 50,000. That is what you have to say. Okay, next.
Sir, this is the last one. If you permit me,
Yes.
I will ask you one thing. There is a proposal for decriminalization of TDS TCS.
Yes.
In the budget.
Yes.
If it is paid within the due date of filing of the return of TDS TCS, on behalf of tax bar, do you think, shall we has it on before filing of income tax return?
Shall we?
Income of return.
Okay.
Within the due date, if it is paid, there should not be any criminal proceedings.
Okay.
Instead of filing of TDS TCS return.
No, what you mean to say, the TDS deadline is missed and you are
For
trying
filing
to...
of TDS TCS returns.
Okay.
Up to that date, they have given decriminalization.
Correct.
If it is paid within that date. So we seek extension of the date to filing of the return of income.
For filing of return, why do you want extension? For paying
Because
of taxes anyhow. No, that would amount to revision of the return. No, suppose your return has not captured all the entries properly, then you will revise.
It is regarding payment.
Huh.
It is regarding deducted, not paid.
But he is not on the payment. He is telling payment he is doing correctly.
Payment. No. The decriminalization is for payment only.
Yes.
Or delay in payment.
Okay.
The decriminalization proposal is there only for the due date for filing TDS TCS return.
Okay.
What we want to seek, it can be made up to filing of the return of income.
You have to make a representation.
That is what, sir.
But anyhow, they will not agree to that because why do you require time till then? Your government's money you should not use, no? See, when you are deducted, you are a trustee holding the money on behalf of the government, whether it is GST or TDS, whatever it is. You say you have collected from your invoices as GST or collected TDS from the payments you made. You are not supposed to use that money. Definitely it may not be agreed.
They may not agree, but we are paying interest.
Then I thought you are talking about you will pay interest. That means you are trying to use government's money at a lower interest. No, I don't think they would.
Sir, we are getting from bank 1.5. From bank we are getting at 9-10% per annum. So that is the can we represent?
I think it is on a weak wicket. It's on a weak wicket. They would not agree to that.
So with this,
and it would keep our image also in at a low level. We should not ask
that
for
is
such.
What?
It would impact the image of the association.
That is what the main thing. Sir.
See, having deducted, you should not say that I will hold this money for a longer period and then pay. No. See, that is the only offence which is susceptible to prosecution. So you should not, in the TDS, you should not.
Or if he has failed to deduct and pay.
Failed to?
Deduct and pay.
Failed to deduct, again it's a SSC in default.
Yes, that is.
And in that case, the payee is under an obligation to make his tax payment. That is anyhow it's there under section 199. It is there. So all those things will come into picture. Anyhow you will become a SC in default if at all you have failed to deduct.
At least this decriminalization. That is because a lot of cases earlier they have faced. Regarding this.
To my knowledge,
TDS
if you have failed to deduct, you will become an SSC in default under section 201. And the prosecution may not be there on you because you are not holding the government money with you. It is immediately the focus will shift on the payee, who is a regular taxpayer, to make his payments good enough as per the advance tax installments.
But I think criminal proceedings were launched some 2, 3 years, 4 years back. So, compounding of the offence.
No, always TDS provisions now they are taking up for prosecution, but all those cases it is deducted and not paid on time. So that is where they are launching prosecution, and not in cases where probably they would have launched even the cases where you are not deducted also, but they are compoundable. They are easily compoundable.
Yes. So with this brief, sir, Secretary Sir, Prasad Sir has
So
to
I'll
leave.
have to leave because I have a
Grateful
call.
to him for extending his
Sir,
stay here.
thank you very much. Please accept a token of appreciation and love on behalf of TBS, sir. Raghu, request all GC members to join, please. Right. Yeah. Just after sir felicitation, we will continue.
Sir, Balaji blessing, sir.
प्रसाद सर खुद ही गोविंदा के प्रसाद है, बहुत भक्त है वो।
Thank you. See, when Amrit Kumar and Ramdev are around, TTD blessings are shown.
All spiritual vibes.
Raghu, cover the check, cover the check.
हमारे पास आ जाओ रघु
So thank you very much.
Thank you so much, sir.
All the best.
Unanswered can send to us, we will try to resolve it. So I urge all my colleague panelists, sir, have you seen the budget proposal? How many changes are there relating to GST? Have you seen that? I think there are 7 to 8 changes are there, and 2, 3 particularly of them are very critical. So our President Hitesh Jain is indirect tax expert, so I urge him to first take up those, then we'll go to our other panelists for 10 minutes discussion on what are the important things concerning the practicing fraternity which are there, which opportunity you can grab. So first I urge Hitesh
Right.
to take up GST proposals which are there for 5 minutes.
Thank you, advisor sir. I'm audible? Yes. Yeah. Though I am not an expert, I am also a student of the subject. But I'll just like to brief upon the major amendments which are brought in the recent budget. The first most critical is the retrospective amendment with regard to the input tax credit in relation to the construction. Say there was a dispute on Safari Retreat judgment which was from Orissa High Court, which was settled in Supreme Court. Now on the same issue, department has brought a retrospective amendment by replacing the word plant or machinery with plant and machinery. So what is the impact? Say example, there is a mall. Now in the mall there was lot of input. You have given the mall on lease. So this input credit was under dispute in that judgment. So Supreme Court allowed only input in relation to the plant aspect of the total input credit. Now that has been replaced. You have to satisfy the definition given under 17 subsection 5 in the explanation with regard to plant and machinery, which is in general the core plant and machinery only. Say example, machinery is there, the plinth is there, plinth will be allowed. Anything other than plinth, boundary wall will not be allowed. So like that, you have to again analyze. So the situation goes to again the same place from retrospectively from July 2017 onwards. So it's not a small thing. All the real estate developers will surely have a major impact on that. The second critical amendment is pre-deposit for penalty. The clause says if in the order there is no tax demand, only penalty demand is there, then you should pay the pre-deposit on penalty as well. 10% for first appeal, again 10% for the second appeal. Now what is the impact? Fake ITC cases across the country are going in hundreds of crores, thousands of crores. There is a circular which says if input is passed on, then you are only liable for penalty because somebody else has actually availed the input credit. So when you are taking penalty only under the order, on that also again you have to pay 10%. So it is a very challenging thing for those who are stuck in those kind of notices. Whether they are genuine or not, that is a different issue. But it will surely affect the working capital because 10% of penalty demand also has to be deposited. But what I found in that clause is, say example, it may be otherwise also, but what I understand, say example, the order says 10,000 rupees demand for tax for ineligible input credit of vehicle, something you have taken. And also there is a penalty demand on the fake ITC, but this matter may not fall under that situation because there is also a tax demand. This is number 2. Then the 15(3)(b), there is a requirement of input tax credit reversal on credit note issued by you by your recipient. But there was no mechanism to identify. Now some mechanism has been brought in place to ensure that. The one more important thing is trade and track mechanism. Tracking of the goods, especially related to tobacco, cigarettes related industries where they want to capture the illegitimate supply of goods. So they will be giving a unique marking for those products, and that mechanism has been given in the budget. Apart from that, supply of vouchers. In general, there was a lot of disputes on supply of vouchers. Vouchers is either a transaction in money or an actionable claim. So it is not a supply. So it is not a supply. So that has been implemented and the time of supply rules has been deleted from the Act. Supply of SEZ, supply by SEZ before clearance of the goods. That is before clearance. So this has been brought in, no supply list, Schedule 3. So these are the major amendments with regard to GST. Thank you.
Thank you, Hitesh. Now coming back to our other panelist. Regarding Pankaj, already you know, he's expert in international taxation as well as on virtual digital asset. He has done a lot of work. Some book also you have written. Some book also he has written. But today he is here in the form of panelist. He will share more about startups, benefits which startups are having, not only with respect to this budget, but something about other benefits like in the form of subsidy, etc., which they are having if possible within the allotted time. If you can share, we'll be grateful to you, Pankaj. Now, Amrit Kota is having good knowledge about MSMEs, so he will share with us what are the benefits MSMEs are having through this budget. Otherwise also, particularly there is a change in the definition of MSME, I think. There is a proposal. So how it is going to impact, on the 43BH particularly provision, I would like to know from him. Before Amrit, now I request Pankaj to take up regarding startups.
Yeah, good morning everyone. So coming directly to the subject, there are 3 important announcements made in the budget on startup. One is that the government is announced a fund of funds. So this was also announced in 2016 when the Startup India scheme was launched, 10,000 crore fund. This is managed by SIDBI. And this is a fund of fund. They don't directly invest in startups. They invest in other AIF funds. And the finance minister mentioned that the government had made 10,000 contribution, and the funds in which the government had made this contribution, they had committed 91,000 crores to invest in different startups. So there is a multiplier effect of what 9 times multiplier effect of what the government has invested. So now after 9 years, again they said that we'll contribute 10,000 more. And there was also mentioning that they want to go into deep tech, AI. That is the area where this fund of funds will invest. So that's one big announcement. Second announcement is on the tax holiday. So the tax holiday, I mean, in India, what happens is we are always looking forward. So earlier when we used to look forward, when we used to grow up, 2020 was the, I mean, anything vision statement 2020. By 2020 we will achieve this. By 2020 we will achieve this. And obviously we don't achieve it.
Yeah, Pankaj, I would like to say, Section 80 IAC, I think, that allows 100% deduction for 5 years to startups. For startups started up to earlier 25, now it is proposed for 2030. So all these sunset clauses have been increased to 5 years. So 80 IAC, please keep in mind. There for the deduction, I think chartered accountants are also required to give some certificates.
Yes, the deduction claim
that
has
is
to be
also there.
certified. So the thing is, earlier it was 2020 when the Startup India scheme came. Then every year, one year they used to extend, because then you will have some amendments in the budget. Thankfully, because now we are already at 2025. Now the next target is 2030. So number of provisions have been said. So Startup India, this tax holiday also has been extended up to 2030. Startups incorporated up to 2030. But the important thing is, I think as chartered accountants, we should promulgate this scheme. I don't think so. There are many startups getting registered. Many startups are starting, but they're not really getting registered and then going for this, claiming this 80 IAC benefit. So we should have, if new businesses are there, it is not just going and registering. It's not a procedural thing, but it will also help them think innovatively, because startups which are only innovative can get registered under the Startup India scheme. So that's an other, and this tax holiday is 3 years. For 3 years out of 10 years. So it is up to the company to decide which 3 consecutive years out of 10 years. So that's one, the second major announcement. The third one is on the credit guarantee scheme. So how many of you are aware there's a credit guarantee scheme? So Amit sir will tell, there is for MSMEs also there. So a lot of these benefits which are announced for MSME are equally applicable to startups, because most of the startups are also within the MSME criteria definitions. So the credit guarantee scheme which is there for startups, that there you can, the provision earlier was, there was a scheme which said that up to 10 crore loans can be provided to registered startup without any guarantee. So now that has been increased from 10 crores to 20 crores. So there is, so there is a lot of, I mean, one side the government through the tax exemptions or benefit trying to push consumption. The second thing what the government is trying to do is put more credit in, because the banking system was now stabilized. After, I mean, the fragile kind of a situation, now over the years it has quite stabilized. Now the government wants to push investment also by giving credit to entrepreneurs and other enterprises. So that's the third major. So these are the 3 big announcements on Startup India.
Regarding this banking sector funding, recently you might have seen Reserve Bank has pumped in 80,000 crores in the market because of liquidity crunch. Banks are not having, because deposits have slowed down, people have diverted their money to mutual funds and stock market. So when the savings with banks have reduced from the public, government has taken this step, and now it is expected that higher rate of interest may be imposed for deposits. in the coming year 0.5% basis. It is expected, I can't say it is expected only. But the benefit as a practitioner, as Pankaj was telling earlier also, we had one day seminar on the startups at Abid's Taj Hotel. One day. Full day seminar. Therein he has explained us what is the role of practicing fraternity in getting your client, guide them, advise them, get them registered. First it starts from LLP or company, whatever you want to have. You start from that. Only thing regrettable is that if you don't charge enough, that is regrettable. So for that last question, one thing I would like to ask Pankaj, sir, what is the reasonable charge a practicing fraternity member from here he should charge for all these services?
So whatever you charge a startup, they will say it is more. So your perception, how much I think for a startup, I mean, now everything is online, available services. So if I put startup registration just on Google, and you will find n number of companies, firms which are offering these services for 10,000. But what is important is the fee is not here important, but what value add you can give. Because once this startup grows and becomes big, they will definitely be in a better position to pay. And I was just remembering when I was working earlier, we had this Flipkart when it was very small, and the big firm started working with it, and there was one of my friend who was working with it, and over a period of 3-4 years, that company had grown so big that just for tax matters, it was giving his full target. So like a 2 crore just for the tax compliances that company was paying, and at the start it was not able to pay anything because they were looking for funding. But once the funding happened, so many things happened that they were able to pay. So startups may not pay you more initially, but over a period, if you also invest in the startup, invest in your time and your professional service, I think over a period of time, they'll definitely be able to pay a much higher fee than the other companies.
So in nutshell, we can say it is your service which matters more rather than what they pay. So now coming to the next panelist, Amrit. I want to know from Amrit, what is there in the definition change and how it is going to impact on from taxation point of view or other, particularly vis-a-vis 43BH. Amrit, regarding this MSME 43BH non-payment, what this definition is going to have impact on that? Please explain it.
Good afternoon, friends. For Indian economy, the MSME's role is very crucial. Recognizing the importance of the MSME, the Finance Minister, Nirmala Sitharaman, has focused on MSME and revised the classification of MSME. In the till previous year, the investments are, if below 1 crore, it is a micro, and below 10 lakhs, small, and below 50 lakhs is the medium. 50 crores, sorry. 50 crores is the medium. So it has been increased to 2.5%. The times 2.5 times. That is, one has become 2.5 crores, the investment of a micro, and the small industries it is 25 crores, and the medium industry it is 125 crores. With regard to the turnover, the previous turnover it was 5 crores for the micro, it has been increased to 10. It is doubled per micro. And this small industries, it is 50 crores to 100 crores. The turnover, if it is above 50 crores, it has been increased to 100 crores. And then medium enterprises, it is 250 to 500 crores. So it's almost, it has been doubled. So the impact of this increasing in the classification, many of the major industries now is coming under the micro, small and medium industries. So once it attracts MSME rules, so they are also getting the all benefits of the government, and they are getting a lot of concessions, lower rate of interest from the banks, and many concessions such as preparation of project reports, so many ISO registration reimbursement, so many concessions prescribed by the central government will also can be enjoyed by the with the enhanced classification. So this is the impact, sir.
One more thing, for 43BH, it is not going to change. Same impact. Whereas in the simplification process, when they were seeking proposals, this proposal was also made. Particularly, I was very anxious regarding this and 9B and 45.4. The thing is that the payment process in the entire year, it is allowed, okay, but what about in the last week or of the year or so, when the transaction is there? So does it mean that the people should not carry out for the fear of disallowance under 43BH? That was there. But this MSME aspect is registration. I think even chartered accountants and practitioners can also get themselves registered. How many of you are registered here?
So I think I will,
including me. Sir, those who have not registered, why? I will go reverse. Why you are not registered? Now, why you are not registered? It is online simple process, Udyam registration certificate you will get, because in future, from seeing the budget, what I see, in all government contract tenders, like even audits also, I think they are going to give preference to those which are registered under MSME. Audits or whatever work they want to give. So I request all of you to go for registration under Udyam, and your client doesn't know about disallowance under 43BS, simply is fear that if I don't pay within the time, disallowance will be there. Though not applicable specifically for chartered accountants as such, but you can ask that if you don't pay your fees within so and so time, your entire expenditure will be disallowed. If because you are registered one. So that benefit you can get. One more thing regarding MSME, I would like to know from Amrut. Sir, what is the dispute resolution for non-payments, etc.? Because there is a section 23 in MSME, I think, which charges interest for delayed payment. So what is the resolution for that? How to claim for that? Whether any practicing member can represent his client for filing that petition or for appearing before the concerned bench for that facilitation center which has been provided for MSME.
First of all, I should say that I am one of the victim of this notices, 43BH notices. I got almost 7 to 8 notices for this thing. So, in fact, we are replying them with some vague answers, but no, none of our explanation they are not accepting. So, we'll have to keep another next month. If you can organize one more seminar like this, definitely I'll be able to share my experience. It is very draconian. AOs are not accepting any of our explanations, sir. And they are using artificial intelligence, and while scrutiny, they are asking the debtors and creditors and advances ledgers, and they themselves are calculating the 43BH, and they are also fixing the chartered accountants why we are not reported in the 3CB and 3CD. So it is very dangerous. And first day when I got the first notice, I didn't get the sleep for 2 days because it is almost 20 crores plus. So I called the client, and client says, no, that all you'll have to take care, sir. Why I should take care? This is the answer we are getting from the client. So we should be very careful. I don't know what will be the fate of the client. Definitely, if it is any financial implication, client will be say goodbye to us. That we can afford, but what about the client? How he will be rescued from these clauses? So we thought, no, we went to Principal Commissioner Income Tax to represent this. No, at least for this year, they should be very lenient. But he said, we'll see. But he has not given any crystal clear answer. He said, we'll see. But I don't think they will be lenient. And if it goes to the knowledge of the Nirmala Sitharaman, she may issue some circular.
Madam has clearly told earlier, based on the representations made by MSME units, this provision has been done. Let them come that we are agreeing to this amendment, then only I will consider. Because based on the disalliance, etc., they will not do anything. The concerning thing, why I am stressing on this section, because last year was the first time you were reporting 43 BH, I think. M. Samba? But what audit reports have been reported, what we have analyzed under TAQ, RB in some cases also, that this reporting is not enough or proper sufficiently done. So you have to verify. And when we have contacted individual auditors amongst us, they say, साहब वो पैसे देता ही नहीं, अपन कितना देखेंगे, नहीं देखेंगे तो फिर भुगतो. Why you compromise your quality for non-payment or not enough paying fees? That is my humble request. Please demand more, go through, report equally. Because for the sins committed or mistakes committed by others, you should not be held responsible. Tomorrow, he was, what Vemula was saying, some survey has occurred. The officers have, the concerned person told that all my accounts are looked after by Vemula. Then the officer called Vemula, I am including your premises in the survey premises, survey search premises. Then he called me, I told Baba, don't give that. You will be also party under 153, that 132, B requisition. Why you say so? Instead, whatever records you have kept, you hand over that he has given to us for analysis, we have handled that and we are returning back. That is not a sin. But maintaining of accounts is a wrong thing, or maintaining some documents. So client will always take that shelter that everything is done by auditor. He knows everything. Sir, pillal enna une, my auditor knows. How many wives I have, my auditor knows. So for everything, auditor knows. So don't get compromised there with the all problems which he is facing. Be genuine to your work. That is my humble request.
Sir, I have a small doubt, sir.
One minute. One more thing, this 43 BH, usually we are certifying at the year end. So after 15th of February, whatever the bills are there, no 45 days we are mentioning. But when I met the officer, he said every bill has to be, yes. So if it is more than 45, suppose if you have issued a bill in the month of March 15th of previous year, if it is not paid till May, so definitely we'll have to calculate the interest on that and we'll have to report that same. So it is not year-ending process like PF and ESA. So it's like a PF and ESA. We'll have to do it on a periodical basis, not on the day-to-day basis. It's not on the year-ending basis. So all the chartered accountants who are aware, because it is my practical experience, I'm sharing it with you. So tomorrow, if you get this thing, you'll have to adjust yourself, first in, first out method, and then produce the ledger before the authorities.
Sir, regarding...
Before he asks us doubt, I pray that is a problem solved sooner than later.
Sir.
All notices are to me only. Why?
This is what one is that, as Ramdev sir said, that regarding my experience, I think many auditors have that, especially youngsters have this practice of maintaining books of accounts at their own offices. Be careful when somebody asks that. As an auditor, you cannot be maintaining books and at the same time do the audit. I think as per the institute rules, you are not supposed to do that. So please take care, and as immediately suggestion given by Ramdev sir is, tell him that we are supervising. Somebody is maintaining, we are only supervising, right? And sir, my doubt is regarding 43BH, the real scenario would be when they come for audit, when we ask them, they simply say that, sir, we don't know that whether they are registered under MSME or not, first of all. The client says that he don't know the whatever from where he is buying, he don't know that whether they are registered under MSME or not. So auditor is not getting complete information from the client. Even client also don't know. In fact, he has written mails to them whether are you registered under MSME or they are not answering. And when you see the bill, nothing is there in the bill. So under such circumstance, this artificial intelligence, how the officer is going to
See, in
track?
that case, no, we can have a lenience. No, for that he said that will not take that serious. But when I requested him, no, when I don't know the information, when it is not spelled out anywhere, and the result, it is not my basic duty to inquire each and everyone whether he is an MSME this thing.
So auditor
now,
is safe.
Now we will have to take a care that you will have to give a one resolution, and we will take the acknowledgement from the every buyer or buyer seller that he is not an MSME. This one declaration we will have to take. We are doing that.
So auditor will take in declaration. What about the assessee, sir? He don't know.
No, just don't get. Sir, I will take 2 minutes here. I think those who are reading law, they know ignorantia juris non excusat. Ignorance of law is no excuse. Similarly, on that same line, if you say, I am not aware whether he is registered or not, he is not going to help us.
How he is going to find out,
The
sir?
thing is that, see, online site is there. Sub PAN number, everything is there.
Just to check.
That is there. See, all exercise, see, that's why I am saying, auditor is like a purohita appointed on janma, on karma. Everything. So, what you should do, as Amrit was telling, you obtain a confirmation first from the client. How many of the suppliers you are having are registered? First thing, under MSME. Then, search for that. Normally, those who are registered under MSME, they get that Udyam number printed on the invoice itself. And the time is also given for payment. Actually, 45 days is not the time. I'm sorry.
No. See,
Time is only 15 days.
15
That
days.
45 days, provided there is a contract. There is a contract. And for that contract, you don't have any separate agreement. So, what we think, that mentioned on the invoice itself, we have to presume that it is a contract. So, all those things are there. To the extent possible, don't tie your hands. See that they are flexible to certain extent. Then you can maneuver later on. I need not tell on the podium like this how you can maneuver. But don't get your hands tied up completely.
Thank you, sir.
Yes, I think this if it is there, you can share important. It is for MSMEs. He wants to add for 1 minute or 2 minutes. You can please share with that.
See, the government is giving a lot of concession subsidies to the MSMEs. The basic thing now, this budget, another 5 lakhs women, small scheduled caste and scheduled tribe SSCs, they wanted to give that concessions up to 5 this, and with a loan limit of 2 lakhs, 2 crores each. So that everybody has to, if you are having any partner, keep one partner as a woman partner so that you can get the 2 crores. 2 crores loan. And this capital subsidy.
Hello.
That capital subsidy is 15%. And credit linked capital subsidy for every enhancement of 1 crore, it is 15% for the technology upgradation. And then investment promotion scheme, it is 15%. Margin money subsidy is from 15% to 35% of the project cost. You can claim. Interest on the bank loans, lower interest you can get, lower interest. ISO certification, if you are getting it done, ISO certification, up to 75,000 they are reimbursing for the MSMEs. Participation in the international fairs. Suppose if MSME wants to participate in the international fairs like Dubai Trade Fair or something like that, for that they are reimbursing certain amount, and they are allowing us to know with the free of visa and all. Their MSME government is taking care. And Prime Minister's Rozgar Yojana has also been relaxed. Stand-up subsidies for the SCs and STs, it has been, this time they have introduced 5 lakhs rupees they will give as a stand-up subsidy. So these are the some of the benefits the MSMEs is getting.
Thank you, Amrit. One more benefit I would like to share for those who are using UPI. How many of you for making payment? You are without guarantee. You are going to get 30,000 credit. That is also proposed. How it will be done? What would be the process? I don't know because I don't use it. So that additional 30,000 you are getting, but हाँ हमारा कैश भी नहीं चेक रहता normally. The only thing is that how it will work, that 30,000, how it will be utilized, what would be the fate of UPI if people don't prepay, because if no guarantee is there, I think majority of the government schemes are run into write-offs and losses only. So we have to take care of that. So with this brief, thank you very much. I think this when finance amendment bill regarding which is going to be proposed next week or whatever time, we will have whole day seminar, I request, because that will require whole day seminar. So Secretary Sir, President Sir, please consider that. And we will have whole day seminar in a good central located place, which will help us discuss everything. And before that, if possible, form a study group to discuss as soon as it comes. For some 7 days, 8 days, we can discuss amongst ourselves so many things. Thank you very much.
Sir, thank you very much, sir. Round of applause to the panelists. And sir, we definitely take your advices. Soon we'll have, once the bill comes, we'll try to plan a full day seminar with subject-wise experts.
Member sitting in the tribunal. So you enjoy that experience. Become delegate. If you are having learning capacity, you have some intention, form a team of 3 to 4 persons, register, join there, case law will be given. Even if you want a mentor, will also be provided. How to argue and how to deal. That is my humble request to you. Since past 3 years we are doing it wonderfully, and this is the 4th time. And Pankaj, Leela, Krishna, Amrit, they are all involved. Our President, Secretary, other co-conveners for Moot Tribunal, Avdesh, Daima, and who else? Co-conveners, Bojja is also involved in that. So please, entire team is there. Don't hesitate, join as even as a delegate. That is also will serve lot of purpose for your practice also. Thank you very much.
Please do register. It's only 750 rupees, including lunch and everything. There is a registration desk. Please do register immediately. So before that, may I request Ram Subramanian Garu, sponsor, please come and accept a token of appreciation. Thank you very much, sir. Tax bar, మీరు చాలా పాజిటివ్గా ఉన్నారు. Surely we will try to take your help. Request advisor sir, Amrut sir and Pankaj ji, please felicitate the sponsor, please.
Come in
Between.
दोनों हाइट सेम है.
Round of applause to the sponsor. See, really this program went very well because of their cooperation. And they're very generous. They have given beautiful Balaji golden calendars, sir. That is really a return gift to all the participants. Sir, Sir Ramdev sir and Pankaj ji and Amrut sir, please accept a token of appreciation as panelists from the committee, sir, GC committee. Please, sir, please. It is our privilege. Sir, please join. Yeah, but just hold on to 2 minutes. We are going to close. Yeah. President, sir, please. Sir, Samud, sir, please. Go to this. Thank you very much. Over to Samamurthy sir for vote of thanks. యాక్చువల్గా భోజనం చేసిన తర్వాత లాస్ట్లో పెరుగన్నం తిన్నట్టు ఉంటుంది. సామమూర్తి గారు ఓట్ ఆఫ్ థ్యాంక్స్ చెప్తే.
యాక్చువల్గా ఇక్కడ ఏంటంటే భోజనం అయిన తర్వాత పాన్ గురించి అందరూ చూస్తారు, కానీ పాన్ తీసుకోకుండా అందరూ వెళ్ళిపోయారు. ఇప్పుడు ఓట్ ఆఫ్ థ్యాంక్స్ ఎవరికి చెప్పాలని క్వశ్చన్ చేయాలి. అంటే జస్ట్ ఒక 2 నిమిషాలు కూర్చోండి, ఎందుకంటే నించుంటే నాకు కూడా మాటలు రావు. అయ్యో నాకు ఫోర్స్ అయినట్టు ఒకటే నిమిషం. యాక్చువల్లీ వెన్ రామ వాంటెడ్ టు సెండ్ monkeys for searching Sita, Sugriva told Rama wants you to go to search Sita. Then Rama told you all have to go to search Sita. All monkeys ran, it seems, except one monkey. All monkeys went off for searching. As soon as they heard that you go and search Sita, they went except one monkey. Then Rama asked, why you have stopped? You only told you search monkey, you search Sita, but you have not told the identity or any resemblances or something. Then he told, okay, you are the only one who will find Sita. And he gave his ungaram. That means this. That person was Anjaneya, Hanuman. In the same manner, we people also, as soon as the seminar is over, we are just like Rama's command has come from office, we are running to offices without waiting for the final word. Because when you enter any seminar, you sit up to the last minute. We don't know what precious words you will get in the last minute also. So my advice is, that's why for students also, you don't leave the hall as soon as you complete the paper. You review your paper, and if any correction is there, you make it. So that is what I want to tell. But coming to today's program, all have left. The speaker has left. The audience has left. The print media has left. Everybody left. Is there? Okay. So it is easy job for me. Okay, today all have forgotten. I want to remind, today is a Vasant Panchami. Happy Vasant Panchami to all of you. Today is the day of knowledge. Day of knowledge, and we got treasure of knowledge. All people are standing in queues before temple, and you are sitting here to gather the knowledge today. So one quote came today morning telling that it is very easy to remember this budget. It is only 4 table and 5 table. Why 4 table? Up to 4 lakhs, no tax. 4 to 8 lakhs, 8 to 12 lakhs, 12 to 16 lakhs, 16 to 20, 20 to 24, and about 24. 4 table. Taxation 0, 5, 10, 15, 20, 25, 30 and above. So 4 table and 5 table, very simple. 2 table में budget खत्म हो गया. And everybody is happy, lowering the tax rates. Everybody is benefited. Everybody is benefited. Now the other side of the coin, nobody is seeing. Taxes are lowered, so people start spending. Spending means everything goes with a GST. So GST collection is there. So you are removing direct tax and collecting indirect tax. Government is from front end it is removing, back end they are collecting. Second thing is, I employed a person, tax rate is low, now I am paying him more. For paying him, I have to earn more. If I earn more, it is value addition tax, I will pay tax. Or else, I am self-employed. Now taxes are not there, I will show more income. More income means I have to earn more. When I earn more, I will pay more. And for a person, self-employed, tax rate is less, so I show 24 lakhs income. Then you are into the GST net. So like this, multifaceted benefit, one benefit to the assessee, multifaceted benefit to the government. So this is another angle. And one more direct legal fees, out of the survey, last year returns, 7.5 crores returns were filed. Totally, out of which 6.5 crores are below 12 lakhs. 6.5 crores, that means it major chunk of not paying tax citizens are removed like this, and we will concentrate only on that 1 crore people. So like that, lot of sea changes there. Now tax rates are okay. And one more thing is, the 12 lakhs is the tax is not there, but once your income exceeds 2.5 crores, you need to file the return. No CA should be worried. No tax practitioner should be worried. No legal practitioner should be worried. Because अरे माँ cases వెళ్ళిపోతే ఏమో, मेरा cases चले जाता. Nothing like that. They will be with you. Then, now coming to today's speaker, P.V.S.S. Prasad garu, he is a versatile speaker. I hear him since 1993. He has lucidly explained and meticulously covered everything, every provision of this thing. Very, very clearly he has covered. And one welcome provision for all CAs or professionals is 194J. It is increased. 30,000 since long time. Now it has come to 50. Amma, 50 ayindi chalu. At least some solace for professionals. Or else every time 30,000, everything, koncham penchita like this, now 50,000. That is major, sir, for chartered accountant. We should go for a round of applause for this. Because it is untouched provision, now it is touched provision. Now he has covered everything. We thank him for immediately accepting and explaining us the key changes in the Finance Act, highlighting and which are not understandable by us beyond our comprehension. So we from the Tax Bar Association wholeheartedly thank him, and we in his absence with a round of applause also. And the applause should be such that it should be heard by him in the car proceeding to his office. And no program is successful without the participation of the delegates. And it was a major decision. And it is a record decision also, because once they announced, more than 250 people have registered. They had to close the registrations. We were worried how to accommodate. Only we booked for only 60-70 people. We had to combine both the halls. And to our expectations, lot of people who are committed have come. Probably those who have not come, maybe having some other important works. Probably client is coming for paying fees, so that's why they could not come. Because this is Basant Panchami, lot of people will think, de denge auditor ko paise. Knowledge amar ko de raha bolke. So participants are the backbone. Keep supporting us, and Ramdev, our advisor, has great ideas to for knowledge improvement. So the participants, we wholeheartedly thank everybody. You are the strength, and you increase our strength so that we will perform better. And third is the sponsors. When Tally and Ram Subramaniam, who readily accepted and sponsored the event. Without his support, we could not have made such a wonderful arrangements. And as he said, return gift. Return gift you will be remembering, sir, because there is no house in this India or in the world, especially in India, without Balaji photo in their calendar in their house. So this goes to value addition for us. And the print media also, who are covering this program, and electronic media, and hotel people for making such wonderful arrangements. We were worried how they will accommodate and address the gathering. They made excellent arrangement. And AV also. And if I have missed out some people, I am sorry. And not but the last least, the GC, especially our dynamic performing president, and duly assisted by a ever active and effective secretary. So both have planning like anything. We will definitely do many things to come. Do come and support us. Thank you very much.
Sir, thank you, sir. Thank you. These are all Anjaneya, sir. మీరు చెప్పినట్టు ఆంజనేయులే. సో అందుకనే ఉన్నారు. లాస్ట్లో they took the good word. Thank you, sir. Thank you. Now, let's all rise for national anthem, please. అందరికీ నమస్కారం. నా పేరు సిఏ చంద్రశేఖర్ వేముల, నాతోటి సిఏ హితేష్ జైన్ ఉన్నారు. సో మేము ఏపీ, తెలంగాణ అండ్ ఆంధ్రప్రదేశ్ ట్యాక్స్ బార్ అసోసియేషన్కి సో ప్రెసిడెంట్ అండ్ సెక్రటరీగా రిప్రజెంట్ చేస్తున్నాము. టుడే బడ్జెట్ వచ్చిన సందర్భంగా ఒక అవేర్నెస్ ప్రోగ్రామ్ ప్లాన్ చేశాము. సో సిఏ P.V.S.S. ప్రసాద్ చాలా ఎక్స్పీరియన్స్డ్ ఆడిటర్ తోటి ఈ ప్రోగ్రామ్ చేయడం జరిగింది. సో అరౌండ్ 170 పీపుల్ వరకు వచ్చారు, ఆల్ మెంబర్స్, ప్రాక్టీషనర్స్. ఇంపార్టెంట్లీ ట్యాక్స్ బార్ అసోసియేషన్ తరఫున ఫైనాన్స్ మినిస్టర్కి, PM మోదీ గారికి థ్యాంక్స్ చెప్తున్నాము. బికాస్ చాలా మంచి బడ్జెట్ ఇచ్చారు. ఇది ఒక ప్రోగ్రెసివ్ బడ్జెట్. సో దీంట్లో చాలా మిడిల్ క్లాస్ వాళ్ళ ఇష్యూస్ని అడ్రస్ చేశారు. ఎస్పెషల్లీ ఇంక్రీజింగ్ ద థ్రెషోల్డ్ లిమిట్ ఆఫ్ 7 lakhs నుంచి 12 lakhsలకు పెంచడం అనేది, అంటే 12 lakhs వరకు ట్యాక్స్ లేదు అని చేయడం అనేది చాలా డేరింగ్ డెసిషన్ అని చెప్పుకోవచ్చు. అండ్ 6 crores పీపుల్ బెనిఫిట్ అవుతున్నారు యాజ్ పర్ ద ఇన్ఫర్మేషన్. సో ఇది చాలా చాలా పెద్ద డెసిషన్. అండ్ అట్ ద సేమ్ టైం ఇన్ని చేస్తూ కూడా డెఫిసిట్ని కంట్రోల్లో పెడుతున్నారు. అండ్ ఇన్వెస్ట్మెంట్ చేస్తున్నారు, క్యాపిటల్ ఎక్స్పెన్సెస్ పెడుతున్నారు, స్టేట్స్కి సపోర్ట్ చేస్తున్నారు. అన్నీ చేస్తూ ఫిజికల్ డెఫిసిట్ కంట్రోల్లో పెడుతూ మిడిల్ క్లాస్ని, ఉమెన్ ఎంటర్ప్రీనర్స్ని, ఎంఎస్ఎంఈల్ని, స్టార్టప్స్ని అడ్రస్ చేస్తున్నారు. ఎక్స్పోర్ట్ రిలేటెడ్ మ్యాటర్స్ని అడ్రస్ చేశారు. అండ్ ఆల్ యాంగిల్స్లో కవర్ చేస్తూ ఈ యొక్క ప్రోగ్రెసివ్ బడ్జెట్ తీసుకొచ్చారని చెప్పొచ్చు. సో మాకు చాలా సంతోషంగా ఉంది. ఈ బడ్జెట్ తోటి డెఫినెట్గా మిడిల్ క్లాసు, బిజినెస్ పీపుల్, స్టార్టప్స్, ఎంఎస్ఎంఈస్, ఉమెన్ ఎంటర్ప్రీనర్స్, ఎక్స్పోర్టర్స్ అందరూ బెనిఫిట్ అవుతారు దీంతో. సో మా తరపున హృదయపూర్వక అభినందనలు అండ్ శుభాకాంక్షలు చెప్తున్నాము ప్రైమ్ మినిస్టర్కి, అందరికీ. సో వన్స్ అగైన్ ట్యాక్స్ బార్ అసోసియేషన్ మెంబర్స్, చార్టెడ్ అకౌంటెంట్స్, ట్యాక్స్ కన్సల్టెంట్స్, అడ్వకేట్స్, ఈ అడ్వకేట్స్ ఎవరైతే ట్యాక్స్ ప్రాక్టీస్ చేస్తున్నారో వారు మెంబర్ కావచ్చు. మెంబర్ అయిన వెంటనే వాళ్ళు ఈ గ్రూప్లో ఉంటారు. ప్రజెంట్లీ ఒక 900 మెంబర్స్ కనుక ఉన్నాము. సో మెంబర్షిప్ డ్రైవ్ కూడా పెట్టాము. సో ఎవరైతే ఇంట్రెస్ట్ ఉన్నారో డెఫినెట్లీ దే కెన్ మమ్మల్ని అప్రోచ్ అయ్యి మెంబర్ కావచ్చు. 15th February మేము ఒక పెద్ద ప్రోగ్రామ్తో వస్తున్నాము. దట్ ఈజ్ మూట్ ట్రిబ్యునల్. అంటే ట్రిబ్యునల్లో ఎలా ఆర్గ్యూ చేయాలి, సో ఎలాంటి ప్రాసెస్ పాటించాలి అనేది మాక్ చేస్తామన్నమాట. అక్కడ బెంచ్ మెంబర్లు వస్తారు. సో ఒక విధంగా ట్రిబ్యునల్లో ప్రజెంట్ చేసినట్టే ఉంటుంది, బట్ ఇట్ ఈస్ నాట్ రియల్ ట్రిబ్యునల్. సో ఒక మాక్ ట్రిబ్యునల్ యాక్టివిటీ చేస్తున్నాము 15th February at బిర్లా ప్లానిటోరియం. సో అందరూ మెంబర్సే కాదు, నాన్ మెంబర్స్ కూడా రావచ్చు, బట్ రిజిస్ట్రేషన్ చేసుకోవాలి. ప్లీజ్ అప్రోచ్ చేసి. థ్యాంక్ యూ వెరీ మచ్.